Hey guys, how's it going? This is CRP speaking to you live, and yeah, all is good. Today is the 54th weekly webinar, and I'm going to be talking about the basics of passive income. And as usual, I'd appreciate if you guys can give me a +1 to make sure that you can all hear me properly and that you see it all properly. You know, it's a mild paranoia that I have. I'll wait for chat to catch up. Just a quick little thing, I made a little announcement in my last video. I don't want to bring it up when we have our conversation at the end of the broadcast, right? I'm happy to take any question about the topic that I'm going to be discussing, the basics of passive income, but you guys know that I'm not really keen on talking about my personal life, except, the stuff I mentioned here and there, but I don't really want to go into detail about it, okay? Okay, so the basics of passive income. Now, here's a key thing. For years and years, I heard different guys saying that, oh, and hi there, how's it going? These different guys I knew saying that they were, that they wanted passive income, passive income. And they talked about it like it was some sort of panacea. But you have to understand what passive income is. It's income that you receive for not working. But see, you don't get anything for free, okay? I mean, every cent that you get, you have to earn it one way or another. Either you work for it, or you trade for it, or you steal it, or somehow you get it. It doesn't come from the sky. It's not like pennies from heaven, okay? So this notion that, I want to get passive income, it's like basically saying, I want to get the lottery, that's absurd. You have to understand that passive income is something very useful, but you have to work very hard to get it. I certainly had to work very hard to get my passive income, and I'll be discussing it a little bit during this broadcast. But you have to understand it's not something that just falls from the sky, okay? It takes a lot of planning, a lot of hard work, a lot of effort, and a lot of time, okay? And so, okay, I just want to put that caveat out there because a lot of guys have this weird notion that, they want passive income and they talk about it like it's money from the sky. No, it's not a universal basic income. Passive income is something that you have to work very hard to get. So, okay, let's get cracking, shall we? Now, the first thing you have to understand about passive income is the notion is that, it's money for nothing and your chicks for free. That's the basic notion, right? But passive income is money that you do not have to work for, unlike your salary or your business profits. That's what passive income is. Now, a caveat, don't confuse passive income with passive investing. That's very, very different things, okay? Passive income is money that you receive every month or quarter or year that you do not work for in order to get. Whereas passive investing is an investment strategy in financial assets where you basically follow the major indices, and you're essentially betting that all of the indices will continue to go up in value, okay? Now, that's been a very profitable strategy for the last 40 years because the Federal Reserve and the European Central Bank and the Bank of Japan have been goosing the stock markets because they, for various reasons I'm not going to get into, they tend to think that the ever increasing value of the stock market is a measure of the health of the economy. And for various reasons, I disagree with it, but they have been doing this and they've been goosing the stock markets, and therefore those people who are into passive investing have done very well because all they basically do is they just look at what are the stocks in the various indices, what's in the Dow Jones Industrial Average, what's in the NASDAQ, what's in the S&P 500 and so forth, and they buy stock exactly like in the same proportion as in these various indices, and therefore their portfolio rises or falls as the index rises or falls. That's passive investing. It's not the same as passive income. Don't allow yourself to be confused. Okay? Okay. Now, passive income is also not the same as fuck you money. Fuck you money is having enough cash on hand that you can walk away and presumably take this cash in hand and invest it in different vehicles, i.e. passive income vehicles, and I made the mistake there, passive income vehicles, and make enough money that you don't have to worry about money, or it's enough money in hand that without even investing it, just living off that chunk of change, you can live for the rest of your life and not have to worry about money. Okay. Now, fuck you money in that regard of having so much cash on hand that you can just stick it in the bank and just draw down from it and never have to work a day in your life. Realistically, you need, say north of 20 million. Okay. North of 10 million, say. Because assume that you're blowing, say, $500,000 a year, which is easy. You can easily blow $500,000 a year. You'd be surprised. And you expect to live for at least another 20 years, 40 years. So you need somewhere between 10 and $20 million. Okay. And so fuck you money is just this enormous pot of money that you get. But passive income is different. Okay. It's not the same thing. Sometimes you get passive income from fuck you money, but sometimes you put together passive income and it's not the same as fuck you money. Okay. Don't confuse the two. Now, what is passive income? Passive income is axiomatically, okay, by definition, income from an existing non-perishable asset. Okay. Now, what does this mean? It's income that comes from an asset. Now, this asset is non-perishable. Okay. A perishable asset is, for instance, grain, or wheat or rye or barley or whatever. That's perishable. It can spoil. Okay. Oil is another asset. It's not perishable, but still, it doesn't produce income. Gold is an asset that does not produce income. We are talking about assets that produce an income inherently. Okay. And that's basically three things. It's income from intellectual properties, income from financial assets, and income from real estate. Those are the only assets that consistently produce an income. Because there are other asset classes like gold, like Bitcoin, cryptocurrencies and whatnot, like agricultural commodities, industrial commodities. They do not produce an income. Yeah, I mean, if you own like a kilo of gold, you're a very rich guy, but the kilo of gold doesn't like magic more gold every quarter or every month or every semester or every year. Now, does it? Of course not. You have a kilo of gold at the beginning of the year. At the end of the year, you're just going to have that kilo of gold. Maybe the price of that kilo of gold went up or down because of how it trades against fiat currencies, but it doesn't grow. But see, intellectual properties, financial assets, and real estate, they do produce an income. Okay. Royalties, intellectual properties, and I'll get into each of these in turn. Intellectual properties generate income by way of the licensees who pay the licensor, i.e. the owner of the intellectual property, pays that guy, presumably you, pays him an amount of money every month. Very large businesses and very famous businesses depend on this arrangement of intellectual property. I can think offhand of Disney. Disney's whole business model is based on that. And I'll get into that in just a moment. But you have to understand, of all of the asset classes, only 3 produce income. And therefore, they are the only ones that can produce passive income. Just by the fact of you owning these assets, an income is generated. Okay. You do have to make a little bit of work. Okay. Obviously, like for instance, with intellectual property, you do have to find somebody who will pay you a licensing fee or a royalty for that intellectual property. For a real estate asset, you have to go out and rent the property in order to generate the income. But that's relatively minor work. I mean, how long does it take you to rent the property in terms of actual hours that you spent doing it? Not that many, obviously. Okay. That's the point of passive income. Okay. That you are not spending your time generating the income. The asset itself generates the income without you having to do much of anything. Okay. Now, from this, obviously, we realize that passive income front loads the effort. Hang on a second. Let me just, before I continue, I just want to check to make sure everybody's okay, right? Everybody can see this properly. I take it that nobody's complaining. I'm looking at the chat, nobody's complaining, so I take it that everything's okay. Okay, great. Let me just continue. Sorry about that. I just get, I get paranoid. I get paranoid that the goddamn thing, freaks out. Like the other time, and I still haven't redone that webinar where, the key 45 minutes of the fucking thing went on the fritz and I didn't know about it. And I was yapping away for 45 minutes straight. And yeah, well, anyway, so to get back to this, Passive income front loads your efforts, okay? Because see, you have to have a pot of money at the beginning in order to get the asset that will generate the passive income, okay? I mean, think of it in these terms. Say, for the sake of argument, that you want a piece of property, say a store. You find a nice location in some strip mall or some city somewhere, and it would be perfect for a store, and you get a good deal for it, right? Well, you got to get the money to buy the fucking store now, don't you? Okay. Now, once you buy the store and rent it out, then it's all smooth sailing. You're getting income every month from the rental, right? That's what you want, but you have to get the money first to buy the fucking thing, right? Yeah. Passive income front loads the effort. That is, at the very beginning, you have to make the effort to get the cash. You have to work or do something to get the initial chunk of capital necessary for the passive income. Okay? You got to keep that in mind. Now, once you start with that chunk of capital, then you derive income from parking that capital into something that earns an income without effort. Now, why am I emphasizing this? See, a lot of guys, they talk about passive income, but they don't realize what it entails. You got to get the money first, the capital first, in order to put that capital into the passive income, into the passive income asset. Okay? You have to start there. Now, if money happens to fall from the sky, and it does, sometimes money just happens to fall from the sky for whatever reason. You win the lottery. I mean, think of that, right? What you want to do is, if money falls from the sky and into your lap, which happens, and surprisingly often, by the way, what you want to do is, as soon as you get that money, realize that you should not, quote unquote, invest it in anything except passive income vehicles. Okay? Don't put it in the stock market. Well, I'm going to get to the stock market and the bond market in a little bit, but don't do anything stupid. If you get a chunk of cash, put it into assets that will generate a passive income, like intellectual property, like financial assets, and like real estate. Okay? Think of lottery winners. Lottery winners, I mean, it's a tale as old as time. These guys who don't know shit from Shinola, right? They get like $1 million or $10 million or $100 million. I mean, there are guys who have earned hundreds of millions of dollars. Think of Mike Tyson, for instance. Okay? They have earned huge amounts of money and blew it all. It's surprisingly easy to blow 100 grand, $1 million. It's surprisingly easy. Okay? You can easily blow $1 million within a month. I'm not kidding. It's very easy to do so. Okay? I mean, you buy yourself like a Lamborghini and you're going to go whole hog. You're going to get the 300 grand one, and you're going to get like some nice house somewhere. But first, you're going to party with your friends, and that party with your friends, you could easily blow $50,000 to $100,000 in a week-long, 2-week-long party with 20 of your closest friends at a 5-star resort. Easily blow 50 to 100 grand in a week. Okay? In a month's time, you can, without breaking a sweat, blow $1 million. Okay? You'd be surprised. But anyway, so if you get money that falls from the sky, you instantly want to park it into a passive income vehicle. Okay? Because what happens is that a lottery, money from the sky, it's a fluke. It happens and it won't happen again. I mean, how many people do you know, lottery winners that you know, who won it twice? Ironically, I actually do. My great-grandfather. Not kidding. My maternal grandmother's father, he won the lottery twice in his 70s and 80s. I'm not kidding. It was shockingly lucky. It wasn't big money, okay? But still, he won it twice. Fucking lucky. But anyway, most lottery winners, they blow it. They fritter the money away. Don't fall for that mistake. In my own case, my first big payday was when I was 28. I got paid $1 million for 2 novels. And what happened was that I essentially blew that money in relatively short order. Okay. I mean, within 3 years, 4 years, that money was gone. Yeah, I'm telling you, it happens. Okay. And I thought I was being clever and all the rest of it. I was actually worried. I thought to myself, this money, I got to take care of it. But I didn't know enough at the time, and I didn't have the right guidance at the time, and I did wind up blowing it. It happens. Okay. So you got to keep in mind that if you get money from the sky, if it just falls in your lap, okay, a disproportionate amount of money, You got to plow it in instantly into passive income vehicles. Even if you don't know how to market the passive income asset, it's smart to just park that cash there. Buy a plot of land, buy whatever the fuck. Something that you can easily sell. I mean, don't buy some plot of land in the middle of fucking nowhere that nobody ever wants to buy. No, I mean, buy a plot of land like a parking lot in a city or something like that, or something where there might be a demand if you at a later time you want to sell it. But if you're not sure what to do, just park it, okay? Don't blow it. Don't spend it. Be smart, okay? Anyway, passive income, the whole point of passive income is that it's your retirement plan. I mean, that's the bottom line issue, okay? Why is it your retirement plan? You see, when you're young, you're going to be presumably working. You're going to be working or having a business of some sort, right? As you get older, you won't have the energy or frankly the interest to work. As you get into your 60s and 70s, you're not going to want to work. You're going to be like tired, okay? Because it happens to every person, every man, every woman. You get into your 60s and 70s and you just don't feel like it, okay? Because you're tired. The only old people who are working are people who don't have any money, okay? I mean, if they had their druthers, they'd be sitting at home watching TV and playing with the grandkids. That's what old people want to do. And you're going to become an old person, okay? You got to keep that in mind. So you got to understand that if you're thinking to yourself that you want to get passive income so that you can loaf and do nothing, you're a fool. The whole point of a passive income is for your old age, okay? Now, because when you get to your old age, of course, you will not have the will to work. You just won't want to. You'll just want to watch TV, see your friends, see your grandkids, and fuck all the rest of the world, right? On the one hand. But on the other hand, you're going to need money to live, of course, to pay for food and whatnot, pay for entertainment, be able to go on vacation or go wherever you want to as an old man. That's why you need passive income. That's why it's so essential. It's not something that you can just decide, no, it's not really my thing. I'm just going to work all my life. No, you have to have passive income because you will get to a point in your life that you don't want to work anymore. You will just not want to, okay? And it happens to everybody, okay? There are very few men who, if they have the choice, they really want to continue working. Sometimes they do find meaning, but for the most part, as you get older and as you either accomplish the things you wanted to do or realize that you will never accomplish them because they're just beyond your grasp, right? Either way, you're just not going to feel like wanting to work anymore. It's the rare older guy who continues to work, who has some drive in him that urges him on. As you get older, it's just like, I don't feel like it because I already achieved what I wanted, or I don't feel like it because I'm never going to achieve what I wanted. That's the reality of it, okay? So you're going to need passive income for that stage of your life. You can't depend on the government or corporate retirement plans or pensions, okay? And anybody who does is a fool. You can't depend on Social Security or 401ks or any other plans or retirements, or pensions or whatever. If it's a government entity or a corporate entity, they will try to fuck you over. And so you're a fool to depend on it, to think that they will be so magnanimous that they're going to take care of you. They're not going to take care of you. Only you will take care of yourself, okay? And I've said it in other videos. As a young man, you got to be thinking of the old man whom you will become, and you want to be taking care of that old man because nobody else will. The government won't. The politicians who say all the bullshit, all the bullshit that they say, why do they say it? To get the votes of the old people who are alive and voting today, because the old people tend to vote a lot more than younger people because they've got nothing better to do. It's a form of entertainment, quite frankly. And so what happens is that a lot of politicians will say all kinds of bullshit, but you can't depend on that bullshit because it's bullshit. It's lies to get people to vote for them. You cannot depend on the government. And let me give you an example. See, a few years ago, I forget the name of the committee right now off the top of my head. I should have posted this before. There was a commission that was put together, a 5-man commission, to analyze the issue of Social Security. And you know what the basic solution was? The basic solution was that if they misrepresented inflation, because Social Security is adjusted for inflation, right? If they basically tweaked the inflation measurement and reduced it by 1%, they could save $1 trillion over 10 years, i.e. $100 billion a year. And the people who would pay for it were retirees. Because if they tweak the number of the CPI, of the Consumer Price Index, so that it was lower, then they wouldn't have to raise the payment of Social Security. The inflation would be the same, but of course the Social Security would not rise because the Social Security is directly tied to CPI number, to the Consumer Price Index that's created by the Bureau of Labor and Statistics. And so what happened was that they tweaked the CPI formula so that it was basically, as of today, it undercounts by 1.1%. And that 1.1% represented a savings of $100 billion a year. See, that's what they do. See, that's the whole point of it. They tweak shit. And who pays for it? The retiree. The retiree who, if you added up all the money that he paid into the system, deserves more than he's getting, but he's not going to get it. You see? So don't trust the government or a corporation for your retirement. I certainly didn't, and I'll be discussing my situation in just a minute. Okay, so don't trust the government or corporations for a pension or anything like that, because they will fuck you over. Oh, another example insofar as corporates are concerned. See, I know this case is I'll say it. It's my stepfather, right? My stepfather was like 8 months away, not kidding, 8 months away from some milestone that would get him a pension from the company that he was working for. He was very successful. He wasn't the CEO of the company, but it was a major company, and he'd done very well, and he'd risen very high. And he was due for a very large pension. And 8 months before he was supposed to get it, actually 2 years before he was supposed to get it, all of a sudden they started demoting him and shuffling him around and stripping him of responsibilities. And 8 months before he was supposed to retire and get this juicy pension, they essentially let him go. They fired him. Yeah. Because, of course, they wanted to save the money. They didn't want to pay him the pension. They wanted to save it. And so, of course, the company has no loyalty to him. Yeah. It's not like a person. No, they have no loyalty. So they fucked him over. And it was a large pension. And eventually he made some moves and sued some people and all the rest of it. And he was sort of able to get a settlement, but it was a fraction of what he would have gotten. Okay, he got a settlement. It was pretty decent, but it was a fraction of what he would have gotten from the actual pension. See? So governments, corporations, they're going to fuck you over. Okay? That's why you need passive income to take care of the old man that you are going to become. Okay? Now, as you secure passive income, it is a mistake to stop working. Okay? As you get older, you're going to make more money, because it's a natural state of affairs. Because as you get older, you get more experienced, and you know which buttons to push, which levers to pull to get a lot of money. It's just a natural thing. When you're starting out, you don't know how to make a lot of money because you're starting out. But as you get older and you've seen a lot of other people and you've experienced a lot yourself, you start to realize, oh, if I push this button here, a chunk of change comes my way. And it's not that much work. And maybe it's a little dodgy. It's not illegal, but a little dodgy, but it doesn't matter. I press this button and I get some money. And you'll learn these little tricks in your profession. It's a natural state of affairs. That's why every guy in his 40s and 50s earns the most amount of money of his entire life, because he knows which buttons to push, because he's been around long enough to learn those buttons and those levers, you see? So anyway, as you secure passive income, it is a mistake to stop working. Working gives meaning and purpose to your life. And I can speak of this firsthand, because in 2016, I got a shit ton of money. I mean, just a really big shit ton of money. Basically, my fuck you money. And it was real fuck you money. It was money that if I just parked it in a bank account and just ate at it, every day, and just had a fairly decent life. I mean, didn't spend more than, say, 25 grand a month. I could live for the rest of my life until the age of 100. No problem. It was enough money that, I didn't have to work. Okay. And 2016 was a really rough year for me, because this happened in June, July of 16. It was all finalized by September, October of 16, right? And I'll tell you, those last few months when I didn't have anything to do, I was just sitting on my ass, my thumb up my ass, and just sitting there doing nothing. It was really depressing. It was really depressing. And I started getting into YouTube. in early 2017, precisely because I needed something to do, because I had all this money, but there was nothing for me to do. There was nothing for me to do. I was just like, what now? Okay. You as a man, as a young man, okay, I mean, I'm talking a young man in his 30s, 40s, 50s, you don't want to give up work. You still want to be working, even if you've set yourself up for your retirement, for your 60s and 70s and 80s, even if you've set yourself up with a nice bit of passive income, you want to be working for somebody in a corporation or working on your own business. I mean, I've said this before, that kind of mentality, some guys are corporateers, that they work very well in corporate environments, and other guys are guys who are natural entrepreneurs and have to have their own business. Neither is better than the other. It's just two styles, okay? And either can be just as successful as the other, okay? There's no automatic glamour in being an entrepreneur, just as there's no fault for being a corporate guy. That's I've never believed that, okay? Because I've known guys who were entrepreneurs who were very unsuccessful, and corporateers who were very successful and very fulfilled. When I talk about success, I mean, I'm talking about satisfaction, personal satisfaction, okay? So it's not that one is better than the other, but that's not the point. The point here, what I want to make is, I want to emphasize is that, see, if you're a corporateer or an entrepreneur, it doesn't matter. You want to keep on working, even if you put together a passive income scheme or system of some sort that fits your life and that will take care of you in your old age. You want to continue working, because, like, I'll tell you, not having work is incredibly depressing. Having money and just nothing to do is incredibly depressing. I mean, really, it is one of the more depressing things in your life. And you think, if you don't have any money and you're really struggling and you're running to pay the bills and you're doing every little gig possible to, you know, squeeze out some cash here and there to pay, and you're going to listen to me and you say, oh, that's crazy. You know, I'd love to be able to sit on my ass and do nothing and just have money and pay all my bills and not worry. Yeah, sure. For the first few months, it's great. But then after a while, it's incredibly depressing because you feel useless. Okay? Because when you're poor and you're running around and trying to survive, you feel alive. But if you just have a mountain of money and nothing to do, you really do feel dead. Okay? And I'm talking from experience. And if it's happened to one of you listening to me, you'll know what I'm talking about. It is the most deadening and disheartening experience to have money but nothing to do. Everything becomes a hobby, and it's a hobby that you're not even particularly interested in. It's depressing. So keep on working, no matter what. Okay. Now, the smart way to get passive income is to make it to pay for itself while you're young enough to work. And I'm going to explain that in the next slide. Okay. What do I mean exactly? See, you're born. And most people aren't born with much, okay? I mean, their parents have some money, but, you know, it's not going to be millions or billions, right? I mean, few people are lucky enough to have such a life, and presumably you have such a life. You're probably not listening to me. Guys who are listening to me, you guys don't have much, or you weren't born with much. Let me phrase that. You weren't born with much, right? You're not going to have like a big inheritance. And so you want to create your own passive income. Now, what you want to be thinking is, how do I create a system or plan whereby the passive income pays for itself? I put some money into it at first, like I put like a grain of sand into the oyster to eventually get the pearl, right? But how do I get the oyster to take that grain of sand and create the pearl, right? How do I make it pay for itself? That's what you want to be thinking. That's the first thing, okay? So let's get into that. Now, remember I said that there are three asset classes that create passive income. There's patents and royalties, that is intellectual property. There are financial assets, and there's real estate. These are assets that generate income. No other asset class does this, okay? Cash, just cash in and of itself, doesn't do this. The interest you get paid by a bank, for instance, well, that's passive income. It's very small, but it is passive income, right? And financial assets, that's all of what you're talking about. You're lending money, and I'll get to that in just a moment. But you see, Every other asset classes, commodities, everything, every asset class, the only ones that produce an income are intellectual property, financial assets, and real estate. Those are the three. Okay. Now let me talk about intellectual property. Intellectual property is basically patents and royalties. Okay. That is, for instance, you write a book and you own the copyright of that book, of course, because you wrote it, and that's the law of the land. If you write something, you are the owner of the copyright, which means that any payment, royalty, is paid to you because you're the owner of it. Okay. The publisher presumably pays you. Now, a royalty, it can also be some other kind of intellectual property that you own that you get the royalty. It could be a patent and you license that patent. Now, what's a patent? A patent is basically a registration of an intellectual property, i.e. an idea, and that you own. You own this patent, right? And you license it to people. Now, the Disney Corporation is famous for this because people don't understand what the Disney Corporation is all about. They think that they make movies. No, they don't make movies. No. The Disney Corporation has two businesses. It's theme parks and it's licensing business. Because you see, Disney, when it started, it made animation. And it was just moderately successful at that. But what happened is it was in the early 30s, and the name of the man slips my mind, but he was not Disney, but he was, I remember an ugly guy, and his name slips my mind, it doesn't matter. What happened was that he came up with this idea that Disney should license its intellectual property to toy manufacturers. And the first toy that was licensed was the Mickey Mouse watch. And that stupid watch was sold by the millions. And that stupid watch is what saved the Walt Disney Corporation back during the Depression, because its animated features were not making enough money. But they licensed the intellectual property of Mickey Mouse and created the Mickey Mouse watch, and then all the other Mickey Mouse toys, and then all the other toys of all the other characters, right? And that's how Disney makes money. It makes money by the theme parks, and it's very obvious how. People come to the theme park, they buy food there, drinks there, they pay for the tickets for the rides and whatnot. That's obvious. But the other thing that they do is that they sell licenses of their intellectual property to toy manufacturers. You see, the movies that Disney makes, they are essentially advertisements for their toys. Disney doesn't even give a shit about how many people actually watch their shows. What they care about, their shows, their movies, what they care about is how many toys are sold, because they have these licensing agreements with Hasbro, with all the toy manufacturers around the world. Hasbro and all the others, they manufacture these toys, Mattel and whatnot. And it's not only those big ones, but also small ones. And in every market in the world, by the way, okay? You go to Chile. Chile is a microscopic market, but there is a company that manufactures coloring books. And they pay Disney a licensing fee to use the Mickey Mouse and Minnie Mouse characters on their coloring books. See? Disney doesn't make these coloring books. Disney doesn't make the toys. It just licenses the intellectual property. That's how they make their money, from the royalties, from the copyright. You see the business model? You see how powerful patents and royalties are? In a society that is ruled by laws, where patents and copyrights are upheld, which is not the case in China, by the way. That's why China is very dangerous. But it is the case in most other countries around the world. But anyway, you can make a great deal of money by selling intellectual property, by licensing it, not selling it. Because, see, if you have an intellectual property, it's an asset and you want to hold on to it, okay? You get the income from licensing it. Now, this is tailor-made for people who have brains and no money, which is basically what happened with Disney back in 1934, okay? And there are a lot of inventors. And you'd be surprised how many inventors there are out there. They are dentists, they are engineers, there are all kinds of people who come up with all kinds of inventions. You can be one of them. And you realize or discover that there is some need for some tool in your occupation, I'm trying to remember the story about this dentist I heard. I read about it recently, but it slips my mind right now. I should have looked up this stuff before. But anyway, see, this dentist came up with some mechanism to hold open patients' mouths while he was doing something. I think it was removing wisdom teeth. I don't know what the fuck it was. It doesn't really matter. He came up with this tool, and he patented the tool. And before you know it, he's making 10 times more money off the fucking patent than he is as a practicing dentist. And dentists do very well. So obviously the fucker was making shit tons of money from his stupid invention. Okay. And it was just the one invention, but it was a very good invention. And see, that's the thing. See, most people, when they think about an invention, they think about like Thomas Edison and the light bulb or something major. Okay. You don't have to think in those terms. You have to think in terms of your business, whatsoever that business is. You're an engineer, you're a welder, you're whatever the fuck, and you come up with a good idea. And if the idea is really good, other people will want to have that idea, use that idea too. So what you want to do, if you come up with a good idea, you patent it. You patent it and you make a shit ton of money. The woman who invented the fidget spinner, you remember that fashion of a few years ago? I mean, like all fads, it came and went, right? But when it was happening, the zenith of it, hundreds of millions of those stupid little toys were being sold. I never understood the fidget spinner thing. And by the way, I always thought it was stupid, but be that as it may, it was a fad, like all fads, like pet rocks and whatever the fuck, Rubik's Cube and whatnot. See, millions upon millions of people purchased the fidget spinner. The woman who had invented it, she had actually gotten the patent for it, but then allowed it to lapse. And lo and behold, she missed out on, at least tens of millions of dollars, perhaps hundreds of millions of dollars. She missed out on it because she didn't have the $600 or she didn't want to spend the $600 to renew the patent on her stupid invention. See? And some other guy didn't steal the patent because she was always going to be the owner of it. But she had to pay in order to get the money from the people who wanted to license it. But once she let it expire, other people could use it without paying her any money. They weren't the owners of the idea. They themselves could not patent it and get a commission from others, but they could copy the idea and not have to pay her anything. And it would have been just a couple of pennies per fidget spinner. But if you have 100 million fidget spinners, right, being sold, and it's 2 pennies, that's $2 million. Okay. And actually, it would have been probably more. It would probably have been closer to, I don't know, 50 cents each or whatever. Who knows? I mean, it'd be between her negotiating the licensing fee and the manufacturer. Okay. But you see my point. See, you don't have to think that your invention is groundbreaking. It can be trivial as a fidget spinner, okay, and a silly. But if somebody wants it and wants to replicate it, it could potentially mean a lot of money. And that's why it's tailor-made for smart people. There are inventors, professional inventors, guys who just spend their whole days fooling around and coming up with new ideas for all kinds of stupid shit. And they make a lot of money off of it, okay? Being an inventor, insane as that may sound, is a viable business model, okay? Okay, so patents and royalties are fantastic for passive income, but the problem, for the most part, royalties and patents, be it copyright or whatever, they have a long and finite tail. And unless it's exceptional, eventually that gravy train is going to end, okay? And it's inevitable because all copyrights, all patents eventually outlive their usefulness because people move on or some new device, new breakthrough has arrived and the previous patent, the previous invention that was patented no longer fulfills the need or is no longer necessary or has been superseded somehow. Or because, the copyright is no longer popular, okay? I mean, I wrote some novels in the late 90s, yeah? I haven't seen a royalty check in years because those books, they were just the silly thrillers that made sense in the 90s. But today, the world is totally different and those books are not popular. There are some books, popular thrillers, that are still selling today. Like, for instance, The Day of the Jackal, which is a famous book. It's an excellent book. It was written in 1970 or 72, something like that, right? And 50 years later, it's still selling. Not as much as it used to, but selling every year. and generating for Frederick Forsyth something I heard along the lines of like 250,000 a year. That's a lot of money because it's a very good book, but that's rare. Most patents and royalties, it starts off making a lot of money and then it's a long tail and it tapers off until it's practically nothing. Okay, that's inevitable. And that's why, for instance, big companies that depend on intellectual property, like Disney, for instance, they are constantly coming up with new characters, new situations for the characters that exist, new stories and whatnot. Because, see, it's a long tail, but it tapers off. And so they always want to be bumping it so that, you know, it goes down and then up again because there's some new story, down and then up again because there's a new character, down and then there's some twist or whatever the fuck. See, I mean, that's the nature of the game. And therefore, in a real sense, you know, patents and royalties are something that you always have to be improving upon one way or the other. You can't just let it be. Okay. And so that's the downside of patents and royalties, of intellectual property. It has, you know, at the beginning, a lot of money, and then it just tapers off potentially to zero. Okay. Now, the second one, you got financial assets. That's the income from financial assets that is passive income. Now, what do I mean by financial assets? Very simple, just two: stocks and bonds. How do stocks give you dividends? Well, I mean, give you income. I blew the punchline. Stocks give you passive income by giving you dividends. Now, what are the dividends? They are the profits of the corporation. See, what is a stock? It's a piece of ownership in a company. So suppose, for the sake of argument, that some company has 1 million shares outstanding. If you went out to the stock market and bought every single share of that company, you bought all 1 million shares, you'd be owner of the company 100% because you own all the shares. See, that's how it works. If you own 10% of the shares, that means that you own 10% of the company. See? Now, a company makes money. A company makes a profit. You know, it pays its taxes, it pays amortization and depreciation and all the rest of it, right? And at the end of the day, it has a profit. Now, where does a profit of a business go to? It goes to its owners, right? Because the owners have the right to the profits of the company, the net profits. So how does that work? Well, if a company has 1 million shares outstanding, it takes its net profits, the profits that are, you know, after taxes, after all expenses, after everything has been paid off, right? The net profit, and it says, okay, this money, we're going to give it to the shareholders, i.e. the owners. And so suppose, for the sake of argument, that this company earned net profits of $27 million. Well, what it does is that it takes those $27 million, divides it by 1 million, because that's the number of outstanding shares. And for every person who owns 1 share of that stock, it gives them 27 bucks. That's how it works. It's as simple as that, right? But the thing is, see, right now, the multiple of a company is so high, that is the price to earnings ratio, i.e. the price of the stock compared to the earnings of the company is so high that essentially you're not getting much money. You're getting, you know, 2% or some shit like that, or sometimes 0, because sometimes a company will basically say, no, we're not going to give out our profits to shareholders. We're going to reinvest the profits into the company with capital improvements or buying new factories or whatever the fuck, right? And so what happens is that you can own a stock and never get a dividend ever, or get a dividend that's paltry. You paid, say, I don't know, for the sake of argument, $100 for the share, and you get a yearly dividend of, say, 50 cents. What the fuck are you going to do with 50 cents? Nothing, right? And so dividends of stock, right? That's the passive income from stock, the dividend. Now, what about bonds? Well, what are bonds? Bonds are IOUs. It's the same relationship as when you put money into a bank and the bank pays you interest on the money that you deposited with the bank. See? The interest is the fee that the borrower pays the lender. When you put money into a bank, you're the lender and the bank is the borrower, because the bank is taking your money, it's borrowing that money and paying you a fee, interest rate, which is the payment for that money that you are lending the bank, right? That's the relationship. When you buy a bond is an IOU, whether it be government debt, government bonds, corporate debt, institutional debt, it doesn't matter what the debt is. Okay. And remember, when I talk about debt or bonds or notes or bills, they're all the same thing. They're basically these little pieces of paper that are IOUs, right? Now, a bond pays out an interest, and it depends on the bond. You know, it could be quarterly or rarely monthly, or it could be by semester or yearly. It doesn't matter. The point is, it pays an income. You don't have to do anything. You buy the bond, and the money comes trickling in. Okay. All you have to do is just register that you are the owner of the bond, and the debtor, okay, be it a company or a country or whomever, will send you a check to that address that you've registered, and you'll get the payment and done. See, that's passive income, right? Now, the problem, okay, in the past, this worked like a charm. A lot of people would buy bonds, they would buy stock, and they would just keep it. And every quarter or every semester or every year, they'd get a nice check from the company that they own the stock of, or the debtor to whom that they had lent the money by way of the bond, right? And they'd get a nice income. Why? Because interest rates were higher, a lot higher. They were 10, 12, 15%. Okay. And so because of that, somebody who owned stocks, who owned bonds, would get a nice little chunk of change without having to do any work, i.e. passive income. And they really didn't have to do any work because they just bought the stock certificate, bought the bond, and that was it. They didn't do fucking shit. Okay. They didn't have to mess around with any kind of contract or anything. It was all automatic. It was automatic for the people. But now that's not the case because interest rates are so low. Interest rates are so low that the yields of financial assets are negligible. Okay. I mean, treasury bonds are paying, they're yielding 1.3%, 1.5 tops. I mean, when it gets to 1.5, people start to worry, as a matter of fact. Okay. The yield, i.e. the interest rate that is being paid out, is so low, okay, that you don't get any money by way of passive income, by way of dividends and interest payments. No, the way you get money now is by what's called yield chasing. That is speculating. You're buying some asset, a bond or a stock, and hoping that in the future it'll rise in price. Well, that's actually true insofar as stock is concerned. Insofar as bonds are concerned, it's actually more sophisticated because you get into a slew of getting into derivatives, and the derivatives have a greater variability. I'm not going to get into the specifics of it, but basically it's gambling. Okay. It's gambling, and it's high stakes gambling, and you got to know what the fuck you're doing, and you don't get into that fucking shit. That shit is not passive at all. You got to be on top of that shit morning, noon, and night. I went through a little phase of that last year. Okay. And that shit is really, really scary because you got to be on top of that shit all the fucking time. Okay. Because these derivative plays, that is financial instruments that are based on an underlying bond, but they are done in such a way as to maximize return, but also they maximize risk. Okay. They're basically bets, and they are very dangerous. And that's the antithesis of passive income, because you have to be paying attention to it all the time. Okay. So you got this problem of yield chasing and doing all this gambling, basically. So that's not passive income anymore. Hence, this is why financial assets today are not passive income, and you shouldn't even consider them if you're looking for passive income. Financial assets today, it's basically a game of musical chairs. The whole thing is going to blow up. When? I don't know, but the whole fucking thing is going to blow up. It's going to go south in a huge fucking way because it's basically a bubble, and it's going to pop. When? Nobody knows. It's like this game of musical chairs, but you know, the game of musical chairs, you know, you have a dozen kids running around these chairs while the music is playing, and there are only 11 seats, right? And when the music stops, all the kids rush to the seats and try to sit down, but one of the kids is going to be left without a chair, and he loses, right? That's the game. That's musical chairs. In this game of musical chairs, it's, you know, millions and millions of investors, and there's only a single chair, okay? When the music stops, the first guy to sit down, he's going to do okay. Everybody else is going to lose their shirt. Okay. When that day is going to happen, nobody knows. When is the music going to stop? We do not know, but it will stop because everything always ends. But going back to the point of this weekly webinar, see, this is why financial assets are not a smart way to create passive income for your future. Not at this time. Perhaps later. I'm talking in like after the crash, maybe a decade later, maybe. But now, for the foreseeable future, between now and the crash, and then the decade after the crash, no. Don't get into financial assets if you're looking for passive income, because you won't get it. Okay. The only way to make money on stocks and bonds, which are the financial assets that matter, because there are others, but I don't want to confuse the issue, is by way of derivatives that are highly risky bets. Okay. For COVID, I'll tell you right now, what happened was that when COVID started happening, I got clued in by Mr. Medicare in January, I remember, and he did like a bunch of things about it. And in the first week of February, I basically bet against the stock market in the United States and Europe, and that everything was going to go tits up because of supply chain interruptions because of COVID. And what happened was that there was a huge panic, and it was much worse. And so I made a ton of money, and my counterparties in these bets that I'd made, they came begging for me to sell them these puts. And I did on the 16th of March of 2020, which happened to coincide with the bottom of the market. I sold at the bottom of the market, not because I was smart. I just got lucky. Okay. My concern at the time was that my counterparties that were desperate to buy my positions. I was thinking to myself, they might not be solvent if this continues going south the way that it's going. So it might be smart of me to get rid of my positions now, not make as much money, because if your counterparties go bankrupt, it doesn't matter how good your bets are, they can't pay up because they're bankrupt, and therefore you didn't make any money. And so I figured, okay, even though I'm not going to make the full amount of my bets, I'm going to make a good 60 to 75% of it. It depended on the different positions. And because of that, I made a ton of money. But the point, between the 2nd or 4th of February, I forget the exact date, I was skiing with my family, and they were pissed at me because I was on the phone with my bankers getting into these positions. But between the 2nd or 4th of February and March 16th, when I exited all my positions, those 6 weeks were among the worst of my life, because I was staring at the computer screen all the fucking time. I was fucking terrified, because it's betting, it's gambling. So that's not passive income. Don't do it. Okay. I'm telling you as a grown man. And on top of that, I was scared shitless, and it was money I could afford to lose. Okay. If I lost it, I'd, be tearing my hair out for, a weekend and drinking too much. And by Monday, I'd be fine. And my lifestyle, my ability to generate the income to pay for all of the expenses I had would not have been affected. Okay. And I was still, sweating bullets. Imagine if you were, gambling with money that you could not afford to lose. Huh? How freaked out would you be? That's why don't do it. I'm telling you the voice of experience. Okay. Anyway, moving on. Financial assets today are not a way to get into passive income. Patents and royalties, yes. Financial assets, no, at this time. Okay. Now, the final vehicle to get passive income, which is frankly my favorite. Okay. And it's the one that I have depended on since 2002. Okay. This is how I have total financial self-confidence, and I'm not worried. Real estate. Because see, it's the one thing that they're not making more of. See? Well, they are. They're making more buildings and shit, but they're not making more land, is my point. Okay? Land is always going to be valuable. Currencies go up and down. Stocks, companies go up and down. But land, real estate, it's always going to have value. Even when it's reduced significantly, and it can be reduced significantly, it's always going to be something. Okay? Okay. Now, real estate is the most realistic way to put together passive income over time, especially if you have limited resources. And I suspect a lot of you guys listening in are thinking along these lines. See, when you don't have a lot of money, and you want passive income because you're thinking about your retirement. You're thinking about being 60, 70, 80 years old and not having the will or the interest in working anymore, or the possibility, because frankly, you could be too decrepit. And frankly, nobody will want to hire a 60 or 70-year-old man to work at whatever job, right? So yeah, it's the best approach. And, the way you do it, the way you put together a passive income is you get the properties to pay for themselves. And how do you do that? Well, this is what you do. This is the step by step. Okay, first you put together a down payment. Okay, you save money in whatever job you have. You set aside 30% of your income, of your net income. You set it aside and you put together a little pot of money. Okay, now you take out a mortgage on a property. Okay, not the property where you live. You always want to be renting your own property. Okay, and I'll explain why in a moment. You take out a mortgage, and with this little nest egg that you've put together, say $30,000, right? Now, $30,000. In a lot of places, you only need 10% down payment. Okay, and in some places, you can even get away with only 5% down payment. Now, say you put together, say $30,000, which is roughly the price of a car. It might have taken you like a couple of years to put that money together. I mean, being really frugal and all the rest of it, you saved, say, $1,000 a month. And after 2.5 years, there you go, you got $30,000, right? Now you take that $30,000 and you say to yourself, with $30,000, I can put it down as 10% down payment. So and mortgage the rest, get a mortgage loan to pay the other 90%. And so what you want to do is you take out a mortgage with which to buy a property, which has a monthly rental income that covers the mortgage, that covers the taxes, the insurance, the maintenance, and any other costs associated with the property. Okay? That's what you do. Like, think of it in these terms. Let me just look at you guys and yeah. Let me see if you guys can see me properly. Okay. What you do is you find a property, okay, that you can rent. Okay, you don't buy a fucking cabin in the fucking, Himalayas or some shit like that where nobody wants to rent the fucking thing. No, you buy an apartment in a city, or perhaps like an apartment for students or some shit like that. And students are great because they have to leave a security deposit. And yeah, they might fuck it up, but you'll pay for it with the security deposit, so you don't give a shit. It'll be the hassle of fixing it. But anyway, it doesn't matter. It doesn't matter. I'm getting into the weeds here. You buy a property that the monthly rental income you get, you can rent it out easily, number one. And the rental income that you get, that you are likely to get, is going to cover the mortgage payment, the insurance, and the property taxes. Always factor those in. A lot of people don't. They always think of, oh, it's just the mortgage. No, it's the insurance and the property taxes. And in some states in the United States, the property tax is fucking high. So you want to be on top of that shit. You want to know exactly how much the other expenses are going to be beyond the mortgage payment. Okay? And what you do is that you find a property where the rental payment per month covers all of the expenses and leaves you just a little bit, maybe 5-10%. Okay? And what's that 5-10%? Is it for your profit? No, it's not profit. It's basically as a little cushion. Because suppose the property is not rented 1 month. Suppose, some pipe bursts for whatever reason, it's not covered by insurance, right? Suppose any little extra expense happens to the property. You want to have a tiny little cushion that you set aside, just for that particular property. And that way, the rental income here covers completely, let me see, the rental income covers all of the expenses, completely, and leaves you a little bit extra. And this little bit extra, you set it aside for a rainy day. Perhaps that rainy day never comes, but it doesn't matter. You just set it aside. Okay? And that's frankly what I do, by the way. And that's how you get a property to pay for itself. Okay, because what happens is that as the monthly payments come in, okay, the rental comes in, the rent comes into you and it goes out, right? You bring in the rental money from your tenant and it goes out to pay the mortgage and the property taxes and all the rest of it, all the other shit, right? And so what happens is that you aren't getting any money, but the property you own is essentially your piggy bank, okay? Because every month you're paying off the mortgage, i.e., the original money that you had put as a down payment is growing. Your equity in the property is growing every month, right? Because you're paying off the loan that you took out to buy the property. You are becoming more of the owner every month and you're not doing anything, okay? Now, of course, you do this over a period of time where you think that you will eventually pay off the mortgage of this property before you retire. Because, of course, it's pointless to own a property whereby there's rental money coming in and then it's going out to pay the mortgage and the taxes and insurance, and you're not seeing any cash when you need cash. Okay, it's pointless. Okay, you want to, when you need the cash as a 60-year-old man, 70-year-old man, you want that property to be free and clear of your mortgage. Therefore, you time your mortgage between now and when you think that you will no longer have income from your work. You see, that's what you do. Now, let me go back to the thing here. Yeah, your property, the property that you're buying is basically a piggy bank. Now, assuming that, what is it? Hang on a second. Right. Assuming the mortgage will be paid off before you retire or before you no longer can work for whatever reason, never prepay the mortgage. Yeah. Yeah. Because see, a mortgage, especially if it's a mortgage that's fixed, there's no variable interest, and most especially, it is not readjusted for inflation. See, the longer you hold a mortgage, the years and then the decades, the smaller it will be. Because think of it. See, suppose, for the sake of argument, that you have a 3% inflation rate per year. Now, inflation is compounded, but for the sake of this conversation, I'll just do it arithmetically. I mean, linearly. Okay. Suppose you take out a 20-year mortgage on a property, right? And there's 3% inflation per year. Okay. Now you rent out the property and you get, say, $500 a month, and that $500 a month pays off the mortgage and the taxes, and insurance, and all the rest of it, right? And hunky dory. So the first year you're net zero, but then by year 5, with 3% inflation, see, all your expenses are going to be the same insofar as the mortgage payment. Your taxes might have risen a little bit. Okay, insurance also will have risen a little bit, but the mortgage, which will be the bulk of your monthly payment, it's going to be fixed because it's going to be a fixed dollar amount. But see, in 5 years' time, you will have been able to get a new tenant probably, and so you'll be charging that tenant more. You won't be charging him $500. You'll be charging him, 5 years at 3%. That's 15%. You're probably charging him, say, $550 or maybe $600 a month. Say $575, just for shits and giggles, right? That is $75 more per month. And you say, well, $75, big fucking deal. That's actually $900 more per year. Wait, 12 times 75? Yeah, $900 more per year. Okay? Yeah, $900 is $900. And also, in 10 years after you started this process, it'll be even more because, see, the 3% inflation, yeah, it'll go up and down or whatever, but it adds up. And in 10 years, it's what, 30%? Again, I'm doing just linearly, not compounded because it's easier, just for the sake of this conversation. But in 10 years, it'll be 30%. And so the rent by that time will not be $500. It'll be what? 30%, it'll be $650. $650 by 12, that's $1,800 more. And you can use that money for other shit or income for yourself even. I mean, the fucking thing might even be producing a little bit of passive income before you've properly paid off the property, see? But see, you never want to refinance the loan because, see, depreciation and inflation is your friend insofar as a long-term mortgage loan, Okay. Unless there's like an obvious benefit that you're definitely going to lower your payment or definitely lower the interest rate, you never want to refinance for a passive income property because you want inflation rather to do its dirty work, because ultimately inflation is always bad for the lender. See? And so in markets like the United States, where people rarely spend, I mean, the average mortgage loan, I heard somewhere it's like 3 years, 4 years. Yeah, because people buy and sell properties and they move on. And so banks don't really care about setting it at a fixed dollar amount. They don't care that inflation is hurting them because the next buyer will be charged more, right? But if you own a mortgage, I mean, if you owe a mortgage for 20 years, by the end of those 20 years, you're going to be paying nothing because of inflation. You see? Okay, so that's why you don't prepay. You just, keep on trucking. Okay, you don't prepay, and if you put together another chunk of capital, you don't prepay the property you already own. No, you go out and you get another property, and you do the same process all over again. See, you always want the property to be paying for itself, because suppose, for the sake of argument, that you buy one property with a mortgage, right? And then you get another chunk of change from whatever. You won the lottery or whatever the fuck. What? You pay off this, and what do you have? You have a fully paid off property, right? And it's going to be generating an income. And you say, well, now I can use that generating income to pay for some other property, some other mortgage. Yeah, but the thing is, see, the return on investment is much lower. See? Because, see, this is something that a lot of people don't understand about return on investment, which is the key issue here. See, return on investment, when you have purchased a property with a mortgage, suppose, think of this. Suppose you buy a house for $100,000 and you can rent it for $500 a month. Suppose, this is all hypothetical, or an apartment or whatever the fuck. So but you didn't pay $100,000 for it, okay? Suppose you only put down a down payment of, say, $10,000, 10% of the price of the property, okay? And you finance the other 90%, right, with a mortgage, right? Okay, so you parked $10,000 into the property, right? And you are getting $500 a month as rent. $500 a month times 12 is $6,000, right? So you say, well, the return on investment is 6%, because you say the numerator is $6,000 at the top of the equation, right? And divided by 100,000, because that's the price of the property, right? Wrong. Dead wrong. See, the numerator is $6,000 on top, certainly. But the denominator is not $100,000. No. The denominator for you is $10,000, not $100,000, because $10,000 is what you put into the property. You see? You bought a property for only $10,000 and you finance the rest of it, of course, right? And you are getting $6,000 every month. I mean, every year, rather. So what it is you put in 10,000 and are getting 6,000. Therefore, it's 6,000 divided by 10,000, i.e. 60%. That's your actual return on investment. It has a single caveat, and that caveat is that the money that you are making, that is the return on investment, has to go into the property, into the piggy bank. But that's your actual return on investment, 60%. It's not free cash that you can take and spend in whatever you want. No, you have to pay the mortgage. But so far as the original money that you put in, $10,000, you are actually getting 60%, 60% return on investment, not 6% return on investment. Because in the equation, the numerator divided by the denominator, the numerator is $6,000, but the denominator is not 100,000. The denominator is the amount of money that you actually put in at the beginning of the transaction, which is $10,000. And so if you were to suppose you get some, like you walk down the street and find a sack of money, $90,000, and you take those $90,000 and you pay off the mortgage, and now you own the property free and clear, right? You took the $10,000 that was your original down payment, and then the sack of money that you found lying in the street, you put those $90,000 in. Now, boom, you own 100% of the property. You put in $100,000. What's your return on investment? 6%. That's all you have. See? And that's a mistake. See? It's a mistake because the point is you don't need the cash of the rental cash now. You're going to need it in the future. And therefore, you have to be thinking to yourself, your return on investment is the money you put in now, not the total price of the asset. You see? And that's why if you do happen to find a sack of $90,000 lying in the street, you do not take that money and prepay the mortgage that you took out for the first property. No, you take that 90,000 and you go out and you buy 9 more houses or apartments or whatever the fuck that are the similar, that are, $100,000 each, and you finance 90%. You do the exact same thing because these are piggy banks. They pay for themselves. They are piggy banks that put money into themselves while you work. You have your job or your business or whatever the fuck, and you just own these properties and they pay for themselves. You see the process, and you see how important it is to never prepay. You always use the mortgage system to your benefit to diminish the denominator so that return on investment, that is the money that you bring in every year divided by the money that you put in to buy that asset, it increases. You see how it works? That's how you build a portfolio of property. A portfolio of property that is a phenomenal return on investment. The only limitation to it is that, see, the money that's coming in by way of this process of renting it out and paying for the mortgage, it goes straight into the property, okay? Into the equity. It doesn't go into your back pocket where you can spend it. But you weren't going to spend it anyway. So it's a good deal. It's always a good deal. Always use other people's money to buy an asset. Never use your own. Use as little money as possible to buy an asset, an income-producing asset, of course. Okay, like a piece of property. You want the bank to be tying up its cash. You don't want to be tying up your own cash. You see what I'm saying? Yeah. I hope that you get the message. Never, ever prepay. And you always want to have the, you never want to prepay. You never want to take money out of your pocket and to pay off a loan. That's the bottom line. Okay? Understand that. Now, the next issue that comes obviously with real estate is you want to buy property where there will always be rental incomes. Okay? Now, years ago, actually decades ago, in the very, very early 2000s, I was talking to a friend of mine, a lawyer, and well, not a friend, an acquaintance. And he was telling me that, yeah, here in Santiago, this is in Chile, it's just a fucking mess. We have to work downtown, and it's just a fucking mess, and we have to get an office here, right? And he was just like very down in the dumps about it. And I was like, well, why don't you go to the nice neighborhood called El Bosque, right? And he said, yeah, we'd go there, right? But it's far away. And the problem is that all the courts are down here. I forgot to mention, he was a lawyer. And they did a lot of, not criminal litigation, just litigation of various sorts. And, the courts were all downtown, okay? And I realized, of course, that because of this, there was always going to be a demand for properties downtown, okay? And see, the properties downtown were not considered sexy. People didn't like them. But there was always going to be a demand for office space in particular. Okay? And that was the first time that I realized that office space in an unsexy place was more valuable than an office space in a sexy place. Because the neighborhood of El Bosque in Santiago, at that time in the early 2000s, was hot, 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 red hot. There were these beautiful, beautiful buildings, just gorgeous, right? Skyscrapers. Look it up on Google, El Bosque, which literally means the forest. It's a neighborhood in Santiago that used to be of these very large houses with a lot of land, okay? Typically like, half an acre, they were mansions really. And so there'd be like typical house with like half an acre or perhaps an acre even of land. An acre is 4,000 meters. No, I'm overstating it. Between a quarter of an acre and half an acre. Okay. And these plots of land that were that size were perfect for skyscrapers. With one plot or just two adjacent plots, you could build a skyscraper, no problem. And so during the late 90s and early 2000s, a lot of builders started building, and also there was a rezoning law. And so a lot of people started knocking down these big old mansions and building these skyscrapers, right? Changed the skyline of Santiago completely. And El Bosque became this financial center. A lot of banks and financial companies of various sorts started moving to El Bosque, and it became sexy. And the return on investment of this property in El Bosque was really shitty. Okay. At the time, I remember calculating it with all expenses and all the rest of it. It was something like 4.5% to 6.5%, depending on factors, right? But downtown, nobody wanted to be downtown. Okay, so all the office spaces were going for peanuts. And the downtown in Santiago, it's ugly, it's crowded, it's smoggy, it's noisy. Nobody wants to be there. But the thing is, see, the demand was incredibly tight. And the return on investment was really fucking high. I'm talking 12 to 20% per year. I'm talking net. I'm talking not with what I was describing before of mortgages and all the rest of it. I'm talking, money in and money out. And all expenses included, okay? Between 12.5% to 20%, okay? And that taught me an incredibly valuable lesson. And the lesson is, a lot of times you will make more money on unsexy assets, the uncool place. You will make a shit ton more money than the sexy place. Everybody wanted to go to El Bosque. Therefore, the prices of shit in El Bosque was astronomical. Nobody wanted to be downtown in Santiago. And that's why whenever a piece of property went for sale in Santiago, it went for peanuts. Okay? It went for peanuts, but it always rented out quickly and at a fairly decent price. Like I said, 12 to 20% return on investment. Okay? Including all expenses, taxes and whatnot. It was an incredibly lucrative deal. The only regret I have now is that I didn't buy more at the time. Because then people caught on eventually, okay? People started catching on, and then they started building skyscrapers downtown, okay? And that little market inefficiency went the way of the dodo. But the point remains, see? For a while, it was fantastic. It was fucking fantastic. Now, today in New York City, you can't give away commercial real estate, both office space and storefront space. I mean, you go to Manhattan. I mean, I lived there in the late 90s. The real estate market was, tight as frog pussy. I mean, tight as fuck. You know what I mean? And now you look at a lot of YouTubers who are doing videos, right? And you see all these storefronts that are empty. Yeah, for rent and whatnot. Offices, huge skyscrapers. You got 30, 40, 50% vacancy rates because of COVID, because of work from home, because people are like, fuck living in New York City. I'm going to stay in Connecticut or New Jersey or Westchester County or wherever the fuck and work from there. I'm not going to fucking go to the fucking city because I don't have to. I can do it all remotely from the comfort of my own home while I'm in flip-flops and shorts and a t-shirt. And so that's what people are doing. And so that's why nobody is renting in New York City. And so the point that I want to make here is, see, you always want to be buying property where there is guaranteed rental income, where, if you buy something, it's not going to be vacant for more than a month or two. Okay. You want it to be like a hot market. It doesn't matter if it's sexy or not. That's not the point. Never pay attention to how cool a neighborhood is or a neighborhood, an area. No, look at how quickly things rent out. If they rent out quickly, you're golden. It can be a crappy neighborhood, okay? Not very sexy or whatnot. But if it rents quickly, it's good. Because when I say that downtown Santiago, it's grimy and crowded. Yeah, because see, the streets in downtown Santiago were laid down in like the early 19th century after like some earthquakes. Actually, earlier. It goes back to like the early 17th century was when the streets were laid down. That's the truth of the matter. And so, because I was thinking of the wider circle of Santiago Center, just bullshit. Anyway, the point. What happened was that, see, those streets were laid down back in the day, way before cars existed, of course. And so now they're narrow and crowded, and it's a fucking nightmare to drive down there. You know, it's just all a big fucking disaster. Parking used to be a nightmare too downtown until actually I got involved with it. That was one of the things that I made a lot of money off of, which culminated in 2016, parking structures. But okay, that's not important. The important thing is that, see, downtown is shitty. But the rental market was tight. And Manhattan is cool. Manhattan is fantastic. Manhattan is beautiful and this, that, the other. But, you know, nobody wants to go there because it's too fucking expensive. The income taxes are too high. And so people want to be living out of the city so they don't have to pay city income tax, right? It's just not worth it anymore. See? So you always want to be paying attention to that. Never go for the sexy places. Always go for the places where the return on investment is high. You want to understand return on investment and understand the true denominator when you take out a mortgage and rent out a property, okay? You want to understand that return on investment, ROI, that's the only thing that matters, okay? The only thing. Okay, so I've been going on, oh, holy shit, an hour and almost an hour and a half. So let's wrap this up. A final note. You want to understand that passive income is for when you are unable to work because of age or infirmity. It is not a substitute for work in your career or business. See, let me be really brutally frank here. Say, a guy needs a purpose. You need a mission. You need something that you look forward to every day. Okay? I can tell you from firsthand experience that when you wake up in the morning and you're like, I don't have anything to do. I don't need to do anything. I got money and I can just jerk off and surf the web. Those are depressing days. Those are really fucking depressing days. You never want to fall into that trap. Okay? You always want to have something that's on the front burner that makes you get up in the morning. And I'm not talking about like some exercise or some shit like that. I'm talking about some activity, something that some work activity or work related activity or something that gives you a purpose, not a hobby and not a sport, unless the hobby and sport are growing and becoming like some sort of endeavor of some sort where you're doing some hobby and you're thinking seriously about hiring a couple of assistants so that you can make some money off of this hobby or something like that. You see what I'm saying? I mean, when I was doing YouTube, for instance, at first it was just, doing the videos for my kid. That was basically 2017. But then in like early 2018, I was actually thinking of winding down the channel and shutting it down. But it was in mid 2018 that all of a sudden I got a huge audience and it sort of like became like a job that I look forward to. And I thank God I'm doing it because, see, it gave me a reason, a purpose. And you need that. If you don't have a purpose, a reason, oh man, you're in deep trouble, okay? So passive income, you got to understand what it's for. It's when you're too old. Prince Philip died the other day, right? And people make fun of them that he looked like a ghoul at the end of his life. The old man was 99 fucking years old, okay? Of course he's going to look like a fucking ghoul, okay? You look at him when he was young, man, he was like fucking handsome as fuck. He looked like a fucking Adonis, I'm not gay, but I would have been gay for him, He looked hot. No, not kidding, right? But the point is that, see, at the end of his life, when he was 99, he looked like a fucking zombie because, that's how things are. And you look at him when he was young, right? When he was in 20-something midshipman, right, in the Navy. Then you look at him when he was like in his 40s and 50s and 60s. He still looked like a man who had his shit together and was like, ready for bear. But then, he gets older and older and older. He gets into his 70s, his 80s, his 90s. And those years pass. And, you know, I'm sure he had a lot of things to look forward to, but in general, he didn't want to fucking work. He didn't want to fucking do shit. He was an old man, right? You're going to become that old man. Never forget it. You're going to become that old man looking like a fucking ghoul, right? And not wanting to do fucking shit. So you better fucking prepare yourself for that day, because nobody is going to take care of you. Okay? No one. No one is going to give a shit about you. Only you are going to be able to take care of yourself. Look in the mirror. Go look in the mirror now. Look at who you are now and imagine yourself like Prince Philip. Go on Google and Google, you know, Prince Philip when he was young. He looks like a movie star, quite frankly. And then look at him when he was dying, when he was an old man of 99. See that difference? That's going to be you. And when you're that old man, nobody is going to take care of you. You're not fucking Prince Philip, okay? Prince Philip, you know, he was, you know, married to the Queen of England. Of course, there were going to be people who took care of him. Yeah, but he was the exception. You, nobody's going to take care of yourself, of you when you're old. Only you, now that you are young enough, can take care of that old man that you are going to become. And that's why this issue of passive income is so important. You want to set yourself up so that when you become an old man, you're set. You who are young now, you are basically going to go in a time machine and take care of the old man that you are going to become. That's the relationship that's going on. Okay? And whatever sacrifices you make now for that old man whom you will become, he will be grateful to you. Okay? In my own case, I spent a few years in the mid-teens, early teens, doing shit that I fucking hated. The solar panel business and then real estate ventures and whatnot. I fucking hated it. Okay? I mean, the solar panel thing especially, I fucking hated it because I realized how fucking corrupt the whole fucking thing is. It's all so much bullshit. I'll tell you guys maybe some other time. But, you know, I hated it. It was just really fucking yuck, right? I'm glad I did it because now I'm not worried about money. I got my fuck you money. Okay? I had to eat shit and do a lot of shit that I fucking hated for, I don't know, 6 years, 7 years. It was really fucking yucky. But I got through it. And, you know, I ate shit for 7, 8 years. I had to work with people that I fucking despised, you know, doing shit that I fucking hated. But now I'm thankful for it. And believe me, you know, if I do happen to live long, which is, you know, not a sure thing. But if I were to live to 70, I'd be very thankful. Okay. I mean, shit, now at 53, I'm super thankful because now I can do whatever the fuck I really enjoy doing. See? Which is the point. You want to make sacrifices when you're young so that later you can do what you really enjoy and not be worrying. Okay. Because there's nothing worse than worrying about money. You've probably experienced that already. You've experienced that feeling of like, oh man, where am I going to get money for food, for rent, for gasoline for my car? You probably have experienced that. I certainly did. I remember one time when I was in a temp job right after college, I moved to LA and I was working at this temp job and I was scrambling to make it in Hollywood and getting nowhere, of course, like we all do at the beginning. And I was working this temp job, and one day, you know, I had just enough money for a gasoline and rent, and what was left over was like a little over $5, and I needed that money until like 10 more days before I got another payday. And so what I did, I went down to the supermarket and looked around and finally found this bag of rice, 10 pound rice, five or 10 pounds of rice. I forget how many it was. It was like this bag like this. And I bought that bag of rice with the last of my money. And I ate that fucking bag the next 10 days. And I would go to the Burger King that was like near my place, right? I lived on a street called South Bentley Avenue near Pico Boulevard. And there was this Burger King just around the corner from where I lived. And I would go there and I would steal these packages of mayonnaise and ketchup, you know, like fistfuls of the shit. And I'd squirt the mayo and ketchup into my white rice every night. and that was dinner for 10 fucking days. That's what I ate. That's how I survived for 10 fucking days. It was no fun at all. Okay. But, I just graduated from college. Imagine if this were happening to you and you're fucking 67 years old. Would you like it? Would you? Do you think it would be fun? Huh? That's why you got to take care of that old man. Okay. Okay. So let's quit my yapping. Let me. I'm going to put the the link to join, and I invite you all to hop on. There it is. I just put it at CRP Patreon. I'm going to show it on screen. Hop on if you're interested in shooting the shit, and yeah, hop on. Yeah, I'm looking forward to it. Any questions or comments? I'll wait for chat to catch up. Yeah, Tipsy, he says here, Tipsy says, my dad recently got his 15-year-old property paid off by just renting it. He'll be making an extra £1,000 a month, I presume, doing nothing. Yeah. A couple of people have joined up. Yeah, that is the definition, Tipsy, of passive income. An extra £1,000 doing nothing. I can live with that. That sounds pretty good to me. Yeah. Okay, let's bring on Russell. Russell, how's it going? What's on your mind? Oops. Yeah, I unmuted you. What's up?
Hey, Coach. Can you hear me?
Yeah, sure. What's up?
Cool. Yeah. So I don't know why I'm on this side view, but whatever. Right. So same Russell who I spoke to you about my settlement money in the how to handle lawyers webinar. And so the last of my settlement money is I'm working now, and I fell for that trap that when I got the settlement money, I just went from job to job, and because I didn't know it at the time that I had FU money, so that was the attitude that I had going into these jobs. I'm like, hey man, if this doesn't work out, like I have FU money, so I'll just quit whenever I want to. And
how much was it?
What?
How much money was it?
Aren't we not supposed to say how much we made?
Well, it's asking you. You don't have to answer if you don't want to.
Okay. No, I kind of don't care. It was it should have been more, but it wound up being $250,000.
That's not fuck you money. Fuck you money is money that if you just set it in a bank and just sat on it for and just spent it, you could never get through it in a lifetime. That's real fuck you money. $250,000 is money that can go really fucking quickly. Okay. So yeah, that was the mistake. You never should have what you call it. I'll bring in some more people here. Alex and Jacob. $250,000 is a nice nest egg that you should have invested. Now, whatever you've got left over of that, I would suggest you reinvest it in something. Yeah.
Right, but then no, I'm glad that we're talking about that now. When I have the right. So I do have a Roth. I do have a Roth IRA.
By the way, I'm not a financial advisor. Okay, so right. I'm not here to give financial advice. I'm telling you, I think it's actually illegal, and I don't want to get into any kind of trouble with anybody. But I'm telling you, I mean, I don't want to go through your whole financial life, Russell. I mean, I appreciate it, but what's your specific question? We want to keep it moving along.
Well, right. My specific question is that should I keep with the Roth IRA, or is it worth it?
Something happened with what the fuck happened with my cam? Oh, there it is. I personally don't think that any of these government schemes, retirement schemes, are a smart idea. That's my personal opinion. As I said at the very beginning, I think that in the end, it's smarter to just be independent and look for a passive income on your own, as opposed to be dependent on a government plan of some sort. But that's me. Okay.
Right.
Yeah.
Right. And you feel that same way about pensions, right? I mean, right, because they're
Yeah.
government.
Pensions, a government pension or a corporate pension, you're going to get fucked over.
Okay.
That's my
Got it.
thinking. I mean, it's just, I think it's just inevitable. Okay. So yeah, that's what I think.
Thanks,
Yeah.
Coach. Much appreciated.
No problem. My pleasure. Take it easy, man. Um, Now let me see. There's Alex Zhivago. Alex, you there?
Yeah, can you hear me?
Sure. Go ahead. What's on your mind?
Yeah, when you are a U.S. citizen, and I'm also a EU citizen because I was born in Poland,
Yeah.
does it make sense to invest in property overseas?
Sure. You know, just so long as the tax liability issue is sorted out. You know,
Yeah, I'm
because
actually looking at leaving the United States and potentially, uh, getting rid of my citizenship. I know the downsides of that, but if I would to live overseas,
yeah.
then that'd probably be a good idea. It's something I'd really seriously consider.
Well, you got to keep in mind that if you are a U.S. citizen and you resign your citizenship, you still have to file with the IRS. I think it's 3 or 5 years. I think it's 3. And you're still liable for taxes, U.S. taxes, for 3 years after you've resigned your citizenship. Okay, but do keep in mind that the United States has double taxation treaties with just about every country in the world, and certainly with the EU. And those double taxation treaties are such that the whole point of them is you don't pay taxes twice. If you're in some other country, say that you're an American citizen living in Australia, and you pay your taxes in Australia, then what you do is that you attach proof of payment of your Australian taxes to your IRS tax return, and that's proof that you did pay taxes only in Australia, and the IRS doesn't charge you those taxes. I mean, you have to do the forms and all the rest of it. You know, it's not as simple as just paper clipping it to your IRS tax return, and that's that. No, you have to jump through a few hoops, but it's just the typical tax preparation shit, and you're all set. So double taxation is not a problem. The problem is if you want to resign your citizenship, you're going to have to continue for 3 years. Okay. Yeah. Yeah.
So double taxation is only a problem if you continue being a citizen.
No, double taxation is not a problem. You don't get double taxed. That's what I'm saying. Okay. If you're living in the EU, I know for a fact that the United States and the European Union have double taxation treaties. So
Okay,
you don't
that's
have to worry about
interesting.
it. Yeah.
Yeah, I've been watching a channel called Nomad Capitalist, and he covers like a lot of this stuff. I'll have to really start looking into that if
Yeah.
I want to explore that option.
Yeah, but
Thank you.
Yeah, but don't. I mean, you got to talk to a lawyer. No fucking around with that kind of stuff. Okay, you want to be talking to a lawyer who knows what the fuck he's talking about. Because like some YouTuber, including myself, I mean, it's different for different people. So, hang on a second. I got a light here that I got.
If you could hear us, we can't hear you.
Hang on a second. Hang on.
You're back.
I'm back. Okay, great.
I could hear you again. Yeah.
Yeah.
Yeah. Thank you for that. I missed that last part. If you want to repeat it or just
No,
move on to the next person.
the last part was don't listen to some random YouTubers, including myself.
Yeah.
Okay, you want to talk to a lawyer about this kind of shit. Okay, because it's potentially criminal. Okay, so don't fuck around with this shit. Okay, an ounce of prevention is worth more than a pound of cure. You know what I'm saying? So yeah. So anyway, Alex, thanks for dropping by. I appreciate it.
Thank you.
Take it easy. Let's see, Vinny the Close. Okay, I don't know. Yeah, Vinny the Close. Hey, Vinny, how's it going?
Hi, Coach. How are you?
Pretty good. I see your head is chopped off.
Yeah, slightly. Slightly. Sorry about that.
What's on your mind, man?
Coach, the it's passive income, and I noticed you're now in dabbling yourself in the cryptocurrency sphere with the NFTs.
Yeah, I'm checking that out. Yeah.
Have you heard of the more of the decentralized finance and specifically this thing called yield farming? What are your thoughts on it, Coach?
I don't have an opinion. I don't know about it. Please tell me or tell us all.
Oh, I guess now again, I'm certainly not an expert, but it seems pretty sophisticated that again, it's a new way of a finance to go against banks, and it has to do with it's a finance based on algorithms, the smart contract based on the Ethereum network. Not to sound too technical, but basically in terms of it's getting a bunch of against a bunch of like big shots, millionaires, and putting it up as like a collateralized loan, right?
Yeah.
And they're getting essentially yield as an interest from it, and it's all like based on the algorithms of this the smart contract.
Well, I would imagine that because of the flexibility of cryptocurrencies, all kinds of nifty and very volatile arrangements will be created that can potentially make a lot of money or lose somebody a lot of money.
Yes.
So look, I'm very conservative, and as I've gotten older, I'm becoming even more conservative insofar as my money, because when you're young, you can afford to be risky because you don't have any money. But as you start putting capital together, you become more conservative because you don't want to lose what you got, because you remember how hard it was to get it. And so in my own case, I'll tell you right now, I would never get into, I personally, as a 53-year-old man, will never get into anything risky. The cryptocurrency thing, sure, I'll dabble in it, but I'm actually not going to put any money at it. I'm putting in like a couple $100 or something to get like started, on the on-ramp of the thing. But I'm not going to put in like any amount of serious money into it, because you just get conservative. You don't want to lose what you've got. Okay. And that's the natural state of affairs. If you are an old man, I mean, like over 45, 50, and you're taking on risky bets, then either you're a fool or you are desperate because you know that your financial needs are greater than you're going to be able to earn by a legitimate job in the near-term future. And so you're dabbling into high-risk bets in order to cover that shortfall. You see?
Yeah.
And that's, you got to be careful. You got to be really, really careful. Yeah.
Can you talk a little bit more about your NFT pursuits? And
I beg your pardon?
Can you talk a little bit more about your NFT pursuits with the your?
I because of different factors on a personal level, I've had to set that aside because there's been like a lot of shit going on here that I've had to deal with. Part of that is what I discussed in the video the other day, but it's just taken up a lot of time. Okay. And it looks like I'm going to be traveling for just to talk to some people and see what they think about my situation. But on top of that, they started with a fucking new lockdown here, which is making life a little bit complicated. So, but I've had to unfortunately put the NFT thing a little bit on the back burner because I've got like priorities right now. But yeah. Anyway, Vic, it was great talking to you, man.
Thank you, Coach. Great talking to you, Coach.
Take it easy.
Bye-bye.
Okay, Idolo, you have muted yourself. There you are. How's it going?
Hi, Gonzalo. How are you today?
Very good, very good. What's on your mind, man?
Not much. I just wanted to pass by to say hi. Yeah. I was going to ask you, I don't know if you have some books you could recommend on passive income.
Actually, no, I don't, because this is just stuff that I've picked up along the way. But it's more like my thinking is not so much that there are ways to do passive income. No, passive income is a mental approach as to what you are doing. Okay, you got to be careful because a lot of people try to sell you the whole notion of passive income as really like a get-rich-quick schemes. You got to be really careful about that shit. Okay. There is no way to get rich quick. Okay.
Yes.
You got to keep that in mind. Number one. And any kind of passive income program or whatever is going to demand a lot of thought and a lot of patience. And it's going to be, by definition, something long-term that you're going to be focused on over years and decades. Okay. And the earlier you start on this path of figuring out how you're going to take care of yourself as an old man, the better it will be for you. Yeah. That's my thinking.
Exactly. I think we could say it's like thinking like life, it's about a trend that you have to adjust it where you want to go.
Well, the thing is, see, so many people are hoping that the government will take care of them. And that, I think, is a tremendous mistake. And I think it's actually very bad for our society as a whole to have created this illusion that the state will take care of you. It would be much better for all of us if we thought nobody's going to take care of us except ourselves, because then we'd be a lot more careful, a lot more prudent. We wouldn't do stupid shit. But in the Western democracies, they've created this system whereby people think that the government will take care of them, but they won't. You know, the government is not going to give you much of an income, you know, and if they keep on doing the shit that they're doing, they're going to blow up the currency. And so that's my concern. And remember, if they blow up the currency, but you own property, so what? You can just readjust the rental, and that's that. You know, you're never going to be hurt by a collapse of the currency. But if you depend on the government to give you money, shit, here in Ukraine, a lot of elderly people, former government officials, government bureaucrats, right? They depend on government pensions, and they get the equivalent of like $25 a week, $100 a month. Nothing. They can't survive with that. But see, nominally, back in the day, it was a lot of money, but today it's nothing. See? So, yeah, it's tragic, but that's what governments do. So don't trust government. Yeah.
Yeah, never. Now in Chile, they want to change the constitution. So
you're in Chile?
Yeah, that's what. No, I'm in Peru, in Lima. But
okay, you're in Lima.
Our neighbor is now changing its policy.
It's all fucked up. It's all fucked up. So only you can take care of yourself. That's the bottom line, and that's how it's always been. Okay.
Of course, Coach. Also, yeah, thank you so much for your time.
Thank you.
I appreciate all the work that you have done regarding what you mentioned in the last video. So yeah, I really appreciate that.
Take it easy. Okay, we have Sharma. How's it going, Sharma?
It's good, Coach. Can you hear me?
Yeah, I hear you fine. What's on your mind?
Okay, I saw two flaws in the thinking of buying properties. If you don't mind, I'm gonna explain it to you.
Yeah, go ahead.
First thing is that in terms of you said about investing in stock, you said you need to monitor it, and it's really true. You got to monitor it. You need to be on top of it. But in terms of acquiring a land, let's say a mortgage,
I didn't say that. I said something different. I said that the stocks aren't paying any dividends, and bonds yield are so low that it's negligible. What you have to do in order to make money in those two markets is play the derivatives markets. You know, buying long, selling short. You know, and another more sophisticated financial bets, right? And with those derivatives, there's a chance to make a lot more money, but there's also a great deal more risk. So you have to be on top of that all the time. That's what I said. Yeah, but go on. What's your point?
My point was that in terms of acquiring a land or let's say a property, apartment, what have you, you have to have also gain a lot of knowledge in terms of, let's say, you don't know if the property is going to go underwater. You can't say. And secondly, my concern is that I don't want to be more debt to make money. Whenever I get a mortgage, it's acquiring more debt.
Yeah. Well, debt is not a problem so long as you manage it properly. Okay. Debt is like it's like driving a car. A car can be extremely dangerous if mishandled. But if you're handling the car properly, no problem. You're not going to get into any accident. You see what I'm saying? If you're paying attention. Same with any kind of debt. If it's a manageable debt and you are planning and prudent and you know, being on top of it, then it's no problem. It's like fire. It's like a car. It's like any tool that is potentially dangerous. if you get sloppy with it, but very useful if you are on top of it. You see? That's my
Okay,
thinking.
cool. Okay, cool. That's it.
Yeah. And by the way, how old are you, by the way?
26.
Okay, look, if you're in 26, right, get into stuff, learn, because you can only learn by doing. And you're at an age that if you screw it up, you have plenty of time to fix it. So don't be afraid of like, oh, I'm afraid of getting into debt, or I'm afraid of doing this or doing that or buying some property. Get into it. See, because first of all, any fuck up that you do, it's not going to be a big deal. You'll be able to figure it out and straighten it out. Okay. So long as you're paying attention. Okay. And any fuck up is going to be experience that is going to be a good thing in the long run, because you only learn from your fuck ups. Okay. And
Of
so
course.
you want to go out there and do stuff and potentially fuck it up, because that's how you learn. So that now that you're 26, anything that you do, you might fuck it up, but the damage is going to be relatively small. And because of this, of the experience that you get, when you're older and you have more responsibilities and there are more zeros to the numbers that are being thrown around, then you won't make the same mistake because you'll have the experience. You see what I'm saying? So don't say no, just say yes and go into it. Okay?
I understand your point, Coach. Appreciate it.
Hey, my pleasure, man. Yeah,
All right.
glad to have you on. So take it easy, man.
Bye-bye.
Let me bring in the next guest, Tobias. Tobias. Tobias, how do you pronounce your name? Tobias, are you there? I'm not muting you. Wait, no, I'm not muting you. You're muted, Tobias. Okay, so let me bring in Juan Villarreal. And we'll wait for Tobias to straighten out his situation. Juan, how's it going? What's on your mind?
What's on your mind? I'm not muting you.
Hello?
I'm not muting you. You're muted, Tobias. Okay, so let me bring in
Okay,
Juan Villarreal.
Coach.
And we'll
Yeah,
wait
you're
for
like
Tobias to
lagging
straighten
so
out
much.
his situation. Juan, you're like
Okay.
lagging.
I don't know why you're lagging so much. You're like lagging like a good 20 seconds, Juan. So
Juan,
I'm gonna kick you, Juan, and when you come back on, because you're like lagging so far behind that I'm hearing myself. And put headphone on.
Sorry. Hello.
Yeah.
I'm so sorry. I was having trouble with the Wi-Fi.
Okay.
I can start a cam as well.
That's okay. What's on your mind?
I wanted to ask if it's a good idea. So I live in Germany,
Don't put
if
your
it's a good
microphone next to your mouth. Don't put your microphone next to your mouth, because all I hear is breathing. I don't hear you speaking. Okay, go ahead.
if it's a good idea to go to Spain and buy a house there, because it's cheaper there, I think.
I have no idea. Yeah, go ahead. You're in Germany?
Yes, because the house prices are really expensive here, and I
Sure.
was thinking maybe in other EU countries it's cheaper, and also it's cheaper. And I don't know if I want to rent it out, the possible house in Spain or something. But yeah, just for my own. I mean, when I'm 45, 50 or whatever, I'm 24 now.
Yeah. But I mean, what would be the point? Just to have a beach house, or to have a rental income producing property?
Basically, not an income producing. I mean, maybe this is my mistake, that I'm thinking, okay, just a house, maybe it's just 50,000 euros, 30,000 euros, and then it's not so much, so I can just, but that's not so good, maybe.
But what would it be for?
For the summer days, because in Germany it's not so sunny, oftentimes.
But you could do, with 50,000 euros, you could do so much more in Germany or Spain, for that matter. Because you see, the idea of buying a property for leisure, that's something that only rich people or old people with money can do. If you are a young guy and you've put together 50,000 euros, good on you, but use that wisely. Don't spend it on rental on a vacation property that you'll use, okay, say you use it 2 months a year, but the rest of the year you're going to have to maintain it. And that's going to be expensive. Will you be able to rent it out? Probably not, because the renters will want to use it during the summer as well. And they're not going to be happy to move out every 10 months, right? So what exactly is the purpose of such a property? It just seems to be a money sink where you can use that money to something much better long-term. You see what I'm saying, Tobias? How do you pronounce your name, by the way?
Tobias.
Tobias, okay. So you see, if you happen to have like a nest egg of 50,000 euros, good on you, but use it for something more wise. Because I mean, it's all good and fine that you want a vacation in Spain, you know, but just rent a place, Airbnb it, as opposed to putting money there and have it stuck there and not working for you. Especially if you're young. You say you're 24. How did you put together this cash, by the way?
I didn't just for the future. Just I mean, just saying that this costs 50,000, but let's say I get like 10K or 5K for the initial payments for the.
But okay, but see, when I talk about these rental properties, okay, of this passive income, it's not for my benefit. Okay, I own different properties in different places. I don't use them. Okay, and in fact, in the properties that I use, I rent them. Okay, that's my approach, because it gives me more flexibility. Because if I own a property and live in it, then it becomes an investment and it becomes more of a weight. But if I rent a property, I can leave whenever I want to. You see, that's always been my approach. Let me know, that's not true. It has been my approach over the last 5 years, that wherever I live, I rent, but the assets that I own, they produce income. You see, that's my approach. And it's proven to be retrospectively much healthier than owning the place I lived, because owning the place I lived in, it just represented a sink of capital. I was living in a place that I owned, but it was a great deal of capital that was just sitting there idle, and I could have used that capital in other endeavors, which is what I'm doing now. You see, so that's my approach.
You mean I can spend like 5K in Germany as opposed to in Spain, like in Germany because it gets rented, etc., as opposed to in Spain on some country house or something.
Yeah, because I mean, like I said, you'll own a country house and you'll be there a few months a year, and the rest of the time, what are you going to do with it? You can't rent it because you're interrupting the renter, because you're going there, you're using it yourself. It would be a lot better to just simply buy a place in Spain, rent it out, and then if you want a vacation in Spain, go to rent a place, some other place. You see? But to sink your capital into a vacation home is, in my estimation, not the wisest use of that capital. That's what I think.
Can I ask another question?
Sure.
So I want to study. I want to start studying now for 3.5 years, and this would be with an employer, together studying and working at the same time. It's very
studying what?
Engineering.
Yeah.
And in 3.5 years, but during these 3.5 years while studying, I also want to start a YouTube channel about mental health, about depression, because I once was very depressed, and I'm worried that my employer sees this online, and so yeah, you know. Like
Can you do the YouTube channel and the studying and the job at the same time?
I think time-wise and energy-wise I could, but I'm worried about the opinion of my employer, about him looking up what I do online and about depression.
Yeah, I don't think that would be that big of a deal, but the time suck would be huge. I don't see an upside because you don't have an established following on YouTube. Okay. And so you spending that amount of time to develop a channel for what? It seems, again, it's an issue of like, you want bang for the buck. You're going to be spending so much time, and frankly, spending that time on the YouTube channel will detract from your schoolwork and your job. I mean, if your employer is allowing you to go to university to get an engineering degree, and as I understand it, are they like subsidizing it or giving you like an extra stipend for it?
They would be paying for the studies.
I would focus on those things, you know,
Okay,
and
and
like
then
a YouTube channel that's like, what were you getting out of it, you know?
I
Uh,
think confidence and confidence and
Well,
experience.
there are other ways to gain confidence that are much more
Mm.
effective than a YouTube channel. Frankly, I would, if I were in your position, I would take a public speaking course. That would be much, much better in terms of gaining more self-confidence and speaking to people, and much more effective than a YouTube channel, and much more systematic and quicker, you know?
Mhm.
So I would look into that as opposed to a YouTube channel, a
Okay,
public course. Yeah.
thanks.
And there are lots of them. Yeah. Yeah. That's
Um,
my suggestion.
Thanks. If I still did the YouTube channel because I really want to do it, etc., would you how should I say? Would it be a problem for the employer because he sees that I'm depressed? I was once depressed, and then he sees, oh, and you know, like you could be depressed at work, and you know what I
Well,
mean?
if you decide to do a YouTube channel, but you don't talk about your employer, I don't see why they would be bothered by it.
Okay.
Yeah, but I really don't. But that's really like a German thing, and since I'm not German and I'm not living there anymore, because I used to live in Germany years ago, I can tell you that that's
Mm.
something that you would know much better than I would. Ask your friends in Germany what they think, you know, and but I would insist it's an issue of time. It's time management, and doing all three things: a job, studying, and a YouTube channel. It seems that you're spreading yourself awfully thin for not much bang for the buck. You know, that's my thing.
Maybe
Anyway,
after.
Tobias,
Okay.
thanks so much for joining. I appreciate it. Take it
Thank you
easy.
too.
Oops, where did he go? Where did he go? Where did he go? Let me. Yep. Okay, Alfred, how's it going?
Hello, Coach. So I wanted to jump here because I wanted to give an answer to Tobias. So the first thing is that the real estate situation in Spain is horrible. So investing right now in houses in Spain, I wouldn't recommend it.
Okay.
First because the rate of return of investment is horrible.
Yeah.
And second, because the government is studying a law that will completely freeze the rental, basically rent.
Oh, they're going to do a rent control. Oh,
Yeah.
then, yeah, that's yeah, that's that then. Yeah, then yeah, yeah, that sounds like a horrible idea then to invest in real estate in Spain. Yeah.
Yeah.
Okay.
If you want to buy a second residence to have something near the beach, well, that's up to you. But as an investment, bad idea.
Yeah, that sounds like it to me too. Yeah. Oh, good to know. So, what's on your mind, Alfred?
Yeah, well, basically, I just wanted to share an idea that we were commenting on the comments here in Patreon a couple of weeks ago. Come on, sorry. So the other day we were talking about subtitles in YouTube videos.
Yeah.
I've been researching a little bit, and it seems that in YouTube, which we have the most videos on, there's basically a feature where you can let other people contribute to adding subtitles in other languages. So I thought it would be a good idea that you could, I don't know, activate that and let other people that follow you, for example, myself, help in adding subtitles in those videos just to share.
Okay. Yeah, I'll look into it. I mean, I don't know about it. It's not something that I pay that much attention to. Yeah. And so, yeah. Anything else on your mind, man?
No, well, just the rental properties. I mean, right now, I have a little bit cash on the side, so I decided to invest a little bit in rental. I studied the Spanish market. That's why I came up with all these insights that will be a horrible idea. And I invested instead a little bit here and there in Ireland. I'm living in Ireland right now. And the return of investment here in Ireland is way better than in Spain or anywhere else.
Yeah, return on investment is the key metric. Everything else is secondary. Yeah, you have to pay attention to that. It doesn't matter how sexy a place is. It's the return on investment. So, Alfred, thanks very much for being on. I appreciate it. Take it easy, man.
Take it easy. Bye.
Bye. Jacob, what's on your mind?
Coach Red Pill, nice to have you here. Sorry earlier, man. I was having a hard time with my freaking internet on my phone. But anyway, man.
Don't worry about it.
Anyway, I was going to ask you, now this is purely speculative, okay? You don't have to give me some crystal ball reading, but just give me your hunch. What the hell you think the Fed's going to do in the next few years? Because I think all this conversation we're having, it's all good, all productive, but people need to realize. Okay, there we go. Yeah. So what I'm saying, Coach, is a lot of the speculation is really based on the Fed, because what people don't realize, maybe the gentlemen that are in this discussion know, but a lot of just people in the lay public don't understand is the reason why crypto's going crazy. The stock market's inflating, the property, real estate's inflating. It's all because of the actions of the Fed. So for us to properly prepare, what do you think is going to be their next move? You think they're going to raise interest rates? And do you think they're going to keep printing like crazy like they have been? Well, that's actually my main question is, you think they're just going to go on this massive printing press spree like they have been?
They've already gone on this massive printing press.
No, I mean like even more than what the hell they've already printed, I think 50% of all dollars since the creation.
Yeah. Look, and nobody knows, and that's the problem. And so everybody. How's the thing? This is my suspicion. Nobody knows what the fuck the Fed is going to do, because the Fed doesn't know what it's going to do. They're just making this shit up as they go along. Okay, and because of this extreme uncertainty, everybody is pretending that this is normal. Because if there was a sense that, okay, the market is going to go down or it's going to go up or whatever, if there was a real sense that, then everybody would head for the exits, whatsoever that exit door may be. Okay. But nobody really knows. And so, and the Fed under Jerome Powell has given absolutely no guidance. And there is the sense that the Fed themselves don't know what the fuck they're doing. And so everybody's just stumbling along. Okay. I personally think that there's going to be some catastrophic crash. When that crash will be, I don't know. Okay. I think it's going to be fucking horrible. And I don't know. I mean, that's the thing. Nobody knows. But the fundamental sin of this whole situation is that when you think of interest rates, you should think of it as the price of money. That's what interest rates are. You are charging somebody to borrow your money. Okay. Now you come to me and I look at your credit history or whatnot, and I say, okay, I'll charge you 10%. Okay. That's the price I'm offering you insofar as lending you money, right? Now, the Fed, what has the Fed been doing by setting interest rates? They've been basically corrupting the price discovery mechanism. They are not allowing interest rates to be on the supply and demand curves to find the correct pricing of money. They've been putting their thumb on the scale, and they've been doing it consistently since 1987. And this has created incredibly cheap capital, but it's created all kinds of problems and distortions, which we're seeing now. And in 2008, with the financial crisis, instead of fixing the problem, getting rid of the bad banks, taking the hit, they just kicked the can down the road, and the can just got bigger, to mix the metaphors. And so the bottom line is, the problem is that the interest rates were not allowed to be organically arrived at, because the interest rates were set by the Federal Reserve. And whenever you set the price of any good or service, it creates market distortions. And that's what we're seeing now. How this plays out, I don't know. I know it ends badly, but does it end in a deflationary collapse, an inflationary explosion? I don't know. Could it be like stagflation, like in the 70s? I don't know. I honestly don't know. And at this point, I'm just watching and holding my breath. And I personally am not invested in the stock market. I mean, all of my positions are basically real estate. I'm just a real estate guy at this point, and I'm not invested in anything, in any security. I'm just very, very cautious because I realize that the whole thing has just become insane. And just to finish off the point, I personally saw that the insanity had arrived right after I exited my my puts last March of 2020. See, that was the bottom of the market. It was, like I said earlier, it was blind luck that I sold at the bottom of the market, okay, which was the top of the market for me, okay, because I had gone into puts, right? But what happened was that when I exited my positions, because I was afraid that my counterparties would go bankrupt, my counterparties were convinced that the market was going to continue to go down. That's why they wanted my puts so badly. They wanted to get out of those positions and have them themselves. And what happened was that the market turned around. All the central banks just started inflating the stock market like crazy. And the market just exploded higher, which makes no sense. Okay. And that's when I realized, this whole market is totally manufactured. And this will eventually explode. It's not organic. It will explode because it's been manufactured by the US Treasury, the US Federal Reserve, and the European Central Bank. And how this ends, I don't know. But I know it ends badly. I'm sorry for the long-winded response, but I hope it answers your question.
No, that was a good answer, Coach. See, this is what I want. I want you to play devil's advocate for a second. This is how I'm thinking at my end. I'm just like you. I don't know what the hell is going to happen, but I'm thinking we're going to have mass inflation, and it's going to get to the point where our currency is going to have somewhat of a collapse, and we'll lose our position as the reserve currency. And the reason why that hasn't happened is because of the military, our military power. Also, compared to other countries, our currency, I hate to say it, it's just a better currency. It's a more stable. It's a better currency compared to the euro, because the euro shit and all the other currencies out there. I mean, Japan, I think they have a debt to equity ratio of 3-to-1. And I think that's the only reason why it hasn't collapsed already is because there's really no one ready to unseat us yet as the world's reserve currency. Because maybe China will be there in a few more years, but I'm just thinking they're printing and printing because because they can. What do you think about that?
Yeah. I mean, they're printing and printing because they can and they can get away with it, and they want to pay off as many people as possible. That's why they're doing it. I think, the military thing, I think that you're right. And I think that if the U.S. suffers a loss, not necessarily like a literal military loss, but if the Chinese successfully invade Taiwan, and I personally believe that now would be the ideal time for both the Russians to invade Ukraine and the Chinese to invade Taiwan. It would be the perfect time because it's before Harris has replaced Biden and the Barrett so weak. It would be like, and if they did it simultaneously, the U.S. would not be able to respond to both situations, and they'd be able to get away with it, the Russians and the Chinese. And that would be perceived worldwide as a serious defeat of the United States.
Yeah, absolutely. I totally agree with you. Absolutely. And that could happen.
If that were to happen, the Chinese invaded Taiwan and the Russians invaded Ukraine at the same time, the United States would not be able to militarily get involved with both. And it would be questionable whether it would even want to. I mean, does the United States really want to go to war over Taiwan or fucking Ukraine of all places?
No. There's no will to.
Yeah. And especially after, 20 years of this Middle East nightmare of Iraq and Afghanistan, right?
Yeah.
Yeah. And so I think that would be perceived as a huge loss of face for the United States. And that might precipitate a collapse of the currency. But I don't know. Look, I mean, like I said, like you said, you said that that I don't have a crystal ball. Nobody does. Nobody knows what's going to happen. But what I think that we can all agree is that we are coming up on some moment of crisis. I mean, let me ask you, Jacob, do you feel as if like something horrible is about to happen?
Okay, yeah, I feel like there's a major Cassandra on the horizon. People call it a black swan, whatever you want to call it. But here's the deal. This is why there's this 1/1,000,000th of a chance we luck out with all this. And just hear me out in this scenario. This sounds crazy, but and you're free to critique it. That's cool. But I have this weird feeling that once our currency collapses, everyone will just stop trading with us or whatever. They'll clear their books from us, and we'll just start domestically producing everything again and just trade within our own borders.
Yeah, I agree. I agree. I completely agree that look, in 2008, I think that they should have bankrupted the banks, declared them bankrupt, wiped them out, and it would have been a lot healthier. See, because a lot of times just the strong medicine and just wiping the slate clean is much, much better than to try to jury rig it and try to keep it going. And
exactly.
And my fear is that if this crisis happens, they will somehow manage to keep it chugging along instead of just wiping it clean and starting over. And I think that would be worse, that wiping everything out and starting with a clean slate would be the best thing. I would agree. If the dollar collapses, the whole thing goes to shit, and everybody says, fuck the United States, we're not going to trade with them anymore, and the United States just starts to get back in manufacturing and just starts over. That would long-term be to the benefit of the US. But I think that a lot of people who are in positions of power now would never allow that to happen because they think that would be a disaster. Their own positions would be destroyed. And so they're going to somehow like just, with string and spit and just like keep it all together going in this ridiculous. I think that's what's going to happen. I mean, I agree with you. I agree with you that, a collapse and a clean sweep would be better, but I think that they're not going to allow it to happen. Yeah.
And I just want to add one final point, and I'll get off and give the other people a chance. I think the real elixir here to everything is the fact that we have guns. We haven't had a major country collapse besides the United States where everyone was armed, or most everyone, I should say. If you have the ability to have arms and stock ammo and such, I think that's actually going to keep the peace. Everyone thinks there's going to be like this mass civil war, and sure, there could be local regions that break out and have fighting, but I think that's actually going to keep the peace once this collapse happens, knowing that everyone has guns.
It's looking more and more like Joe Biden wants to take away everybody's guns.
Hey, I live in Texas, man. That's going to be, boy, that'll be interesting. Well, you know what? Everyone keeps saying conservatives have no line. Conservatives have no line. You see that meme going around everywhere that, conservatives just allow everything. They don't conserve everything. I'll tell you what, when they go to do gun grabs in, say, like the middle of Tennessee or South Dakota or, these very rural areas, I think that's finally when we'll see the conservatives line. I think like places like Alabama, I just don't think they'll tolerate it.
I hope you're right.
I mean, I think that's online. I mean, again, I could be wrong. I could be way off. They could be a bunch of pussies and hand over their guns. I mean, I actually expect that, but there's a small part of me where I think that is where the actual line is, where they start going on gun grabs. And you're right, Biden and Kamala Harris are determined.
I think that a lot of people are going to go a lot of people are going to go fishing and come back and say how they lost all their guns. Yeah, they're going to go to the cops and say, "Oh, shoot, man, I went out into the ocean for just a little, putt-putt in my boat, and all my guns fell overboard." And yeah. But anyway,
Anyway, thanks for your time, Coach. Appreciate it, man.
I appreciate it. Thank you very much. Take it easy. Juan V, and this will be the last question. Finally, how's it going?
How's it going, Coach? Can you hear me now?
Yeah, I hear you fine. What's on your mind?
Okay, I recently got into the solar industry, and I know you said
into what? Right?
In the solar industry, like the
solar industry, solar panels. Yeah, okay.
Panels, and you said that back in the early 2000s, it was a scam.
2010s, 2000. I got out of that business in 2015. Yeah. Yeah, it was a scam. Okay. I saw all the studies of how the ultimately the solar panels are more contaminant than carbon emission from cars or coal burning plants, right? because the solar panels, they tell you that they can last for 20 years, but in fact they can't. They can last you maybe 2.5, 3 years, and that's I saw it. It's not that somebody told me this. I saw it. Okay, and yeah, I think that the whole renewable energies business is a fucking scam, and everybody that I worked with in that business thought it was a scam, but it was a scam that made a lot of money because of regulatory arbitrage, because there were regulations such that it benefited the renewable energy businesses and they could make a lot of money. But it was just because of government intervention that that allowed these renewable energy companies to make money. And I was one of those. And it's not something that I'm proud of. On the contrary. But yeah, and I think it's all just a bunch of bullshit, all these renewables. And I was in this business, okay? I know it. And I think it's bullshit. I think it's all bullshit. And I think that there is no fucking, climate change. And it's just a scam. It's a scam to make money. And I can tell you from the renewable energy producing sector that the whole fucking thing is a scam. I can tell you for a fact, for instance, that a lot of these environmental groups that try to protect the planet, or so they claim, they are just basically organized crime syndicates. I can tell you for a fact that I'm not going to incriminate myself or anybody that I was associated with. But let's say that I can say with, I never saw this, okay? I never saw this. But I can tell you that payoffs were made to Greenpeace, World Wildlife Fund, and some other NGO environmental groups in order to avoid environmental protests so that certain plans could be implemented, certain plans that would make a lot of money to different people could be implemented. I can tell you that most of those NGOs, they took bribes. I mean, I know this for a fact, but I'm not going to say specifically how I know this for a fact, but I know this for a fact. That the whole fucking thing of renewable energy, the whole fucking thing about the environment, it's all a lie. It's all to make money, to shake down companies, and the companies involved in it basically manipulate government regulations so that they can make more money. It's all bullshit. And it was so fucking depressing because when I would tell people that I was involved in renewable energy, they'd look at me like I was like a hero, And I knew that it was basically organized crime because that's what it was. Essentially organized crime. Okay. And that was my direct experience. And the business I was involved in, because of how we financed it and structured it, I was in touch with people in China. We financed the whole thing via London, and we had some co-financing from New York. So essentially, it was in Latin America, New York to a lesser extent, London in a big way, and China in a big way. And everybody knew that the whole thing was a fucking scam. All the players, everybody knew that it was a scam, that it was bullshit. I can tell you that for a fact, And I can't tell you the more specific detail because it would frankly incriminate me. I could probably go to jail, okay? But the worst part was that everybody in this business was doing the exact same thing or far, far worse. And everybody knew it. And that was the thing that was so depressing about it, okay? So, yeah, if you're involved in that business, man, and you're going there with illusions and that you're going to do good and shit like that, I'm telling you, you're going to wind up being involved in what is essentially a criminal enterprise on a global scale. That's my opinion about the renewable energy business.
Oof.
Yeah.
Wow. Yeah.
Sorry to burst your bubble there, Juan.
Yeah, you gotta say the truth. That's fine. Yeah, because
well, I can only tell it to you guys in a sense because see, I mean, I don't want to put you down by any stretch of the imagination. You in particular, Juan, or all the people listening, but you're too few and too random. It's not like, 100,000 people are listening to me, right? How many people are on the thing now? A couple of dozen or something. And so nobody's going to pay attention to this. But I am telling you, the whole fucking thing is a scam. It's organized crime. If I were to say this publicly, I'd be canceled. I'd get into all kinds of trouble. But here I can tell you the truth because, you're so few, and so nobody pays attention to it. But I'm telling you for a fact that whole fucking thing, that whole fucking business of renewable energies is just organized crime. Yeah. And so if I were you, quite frankly, I'd get involved in some other line of work, man. Because see, it's great when you're talking to people and you tell them that you're doing renewable energy or whatever, and they look at you like a hero. Yeah. But the day-to-day being in such a corrupt, underhanded business, it's not worth it. At least that's what I think. Okay. So yeah.
I mean, I guess I'm gonna still close a deal tomorrow because I'm gonna close my first
What are
residential.
you doing?
I mean, because it's good money, to be honest.
What's the deal that you're closing tomorrow?
Uh, I got a customer here in California. I'm gonna get him panels for his house.
Oh yeah, that you're basically a salesman. Yeah, sure. Yeah. Okay, look, it's what happened. You're selling solar panels. Yeah. How long do you think the solar panels are going to last? Or let me phrase it. You told the customer how long they're going to last. What number of years have you told him?
30.
30.
That's what
It'll be 5. That's what will happen. Yeah. You wait. I mean, how long have you been doing this business? Well, you just started. This is your first deal, right?
Yeah. So
have you talked to other guys who have been there for a long time?
yeah, I'm at a company. There's guys who have been in the industry for 2 years, 3 years.
How long? Oh, 3 years is the maximum?
Mm.
Yeah. Have they had to replace solar panels that they already installed?
Not that I know.
Okay. Well, keep an eye on that. Okay. Keep an eye. I mean, because this company that you're working for, it hasn't been in business long then.
But I've talked to people who in their houses who have had panels for more than 9 years.
Oh, really?
Yeah, really. I was
Okay.
Friday. I was talking to this guy, and he said he's had his panels for 9 years, and they're still working.
Okay. That's good on him. It could be the different manufacturers or something, because, well, we dealt with Chinese manufacturers and they were shit. They were all shit. They were all garbage. Okay. They would last 3 years, 4 on the outside. Okay. And we knew this because the same models that we were using because basically what we did was regulatory arbitrage. We created this project whereby we took advantage of Chilean energy law that allowed us to make 33 installations of 3 megawatts each in different areas in Chile. And what we did, the reason they were 3 megawatts each was because that way we would take advantage of Chilean energy regulation. And basically it would allow us to have free dispatch of the electricity we generated. If it was over 3 megawatts, then we'd have to pay for the dispatch of the electricity. And so because of this, we set up these 33 stations to have like a total of 100 megawatt. And this 100 megawatt project, it wound up being financed by the Chinese, but they were basically doing vendor financing, whereby they would finance the project, but they required us to buy panels from another company, a Chinese company. And so that's how it was sort of like, taking out of your right hand pocket to put into your left hand pocket. But we got a slice along the way. But the solar panels that we wound up using were the industry norm. And these solar panels, they just didn't last very long. They lasted, 4 or 5 years. And they were an environmental hazard when they had to be replaced. And it was just a big scam. The whole fucking thing was a big scam. And if you're in California, Yeah, I mean, California has a lot of problems, but probably they're tighter on the regulation. But also, those panels that are 9 years old and still working, yeah, that's probably at the very beginning of the whole renewable energy solar panel business brouhaha. And so those panels are probably they are better made than the current panels, probably, if I had to guess.
Yeah, it makes sense.
But I personally, I mean, I saw it up close. It was so fucking corrupt, the whole fucking thing. And it was just depressing. So, but good on you. Keep on trucking, man. Yeah. I mean, if this is how you're making money and they allow you to do it, you know, yeah. But if I were you, I'd get into some other line of work, man. Yeah, that's my thinking.
Yeah.
Anyway, great talking to you. I'm going to wind it down. So thanks very much for being on. Okay.
Okay.
And I hope to see you next week. Okay, guys, I'm going to call it a live stream. Hang on, let me just do something really quick here. Just to make it all neat and tidy. Yeah. So this has been basically my presentation on the basics of passive income. And I just want to reiterate what I said earlier. Okay. You want to be taking about the old man that you're going to become. Take good care of him. And not just financially, you know, eat right, get lots of sleep, and do exercise every day. Because you'll be surprised how quickly your old age hits you. And like I said, nobody is going to be taking care of you. You have to take care of yourself. Okay. Okay. So it's been great talking to you guys, and I will catch you next week. See you then.